you want to ask something on your phone, that's fine too. All right, everybody, welcome to AMA number 17, I believe it is. Almost a year and a half doing this. Actually, a year and a half because we skipped December, and I apologize for that. There's no way I could do an AMA in December. But this is why we're doing early January now, and I guess the schedule is changing, so expect these AMAs early in the month going forward. Let me just switch over because I need to be centered on the camera. Um, so probably gonna do them early in the month. I don't know. I like it better. It actually lines up with my work schedule wise a bit better. Late in the month is not ideal. Also, yeah, we're not gonna do 5, 6 weeks without one of these. As we're going to discuss in a minute, I think we're coming up to a very important reversal. I don't know. I'm not sure how big it's going to be. So I don't want to get your hopes up too much, but the market is due for a bounce here. And well, if we do this one now and then the one early in February, we're going to have a pretty good idea. We're going to do the two AMAs around the reversal zone. So we're going to be able to discuss live, which is always exciting. Um, what else do I have to announce? I think that's it. Yeah, I was mostly traveling in December, so apologies for not being more active on Discord. I try to get some comments in whenever I could. I want to encourage you to have discussions between yourselves also. This is not a megaphone and you only hear my opinion. There's plenty of opinions, and there's some amazing people on this group. It's small, but curated. I actually pruned the list, so anybody who's not active over a week or so gets booted out. So that's the way it's gonna be for the time being. I don't want a large group. I want a good quality group. I've learned a lot from you. Perry, shout out to you. Having PC issues, you're saying. Okay. I have to thank you for the this day trading method that you shared. I can discuss it if you want. This is nothing to do with cycles. This is nothing to do with Hearst. Um, but it works, and I've done a lot of testing, which I can share with you if you want, to prove that it works. And it's a day trading method, and that's just one of the many benefits that I'm personally getting from this group. Like I've wanted to day trade forever, and now I have not one but two strategies for day trading because based on what was shared, I discovered that there's actually another way to do the same thing, which actually returns about the same amount of money, but it's good. The way I like to diversify my own, let's call it investing, is to have different trading strategies. That's a much better way to diversify than to just say, hey, I'm going to buy gold and silver and I'm diversify that way, or I'm going to be allocating to whatever, just all of these stocks. If you buy a basket of stocks, you're probably copying the S&P 500 or the Nasdaq or the Dow, if anybody still trades that. So that's not true diversification, especially not when it counts. Sometimes, for instance, 2022, everything was going down except for maybe gold. That's not really how you diversify, in my opinion. The way you diversify is you trade across strategies. So you're going to do some income trading. That's mostly in crypto. You're talking about interest rate arbitrage mostly, and that's not as complicated as it sounds. It's actually pretty simple. You borrow cheap and you lend expensive. Sometimes you change the currency in order to do that. Let's say, give you an example. You can borrow dollars, you can turn them into ETH, hedge your ETH, and buy staked ETH, for instance. That's what large funds do. And that gives you 3-4% APR, plus whatever you get from the hedging activity, but that tends to offset the borrowing. So you're borrowing for 5, you're lending for 5, and then you're staking, and you keep that staked ETH amount. You can do this like 10x. That would be 10x. That would be 30%. I don't want to exaggerate. You're probably not going to do 10x. You probably can't, but you might be able to do 5x. That gives you 15%. That's one thing that you can do. It's delta neutral, has nothing to do with the market, has nothing to do with cycles. That's going to give you income. Another thing that you should do is invest in something that you like. I'm personally buying right now Chinese tech stocks. I think they're undervalued. That's a long-term play. Like I'm not going to touch those stocks for 10, 15 years. So that's another thing that I'm doing. I like to trade options, a lot of options. I've been doing strangles on Bitcoin because I thought it was going to be stuck between, let's say, just above 100, which it never got to. I was listening to the last AMA the other day, and we were discussing 100K tops. It never even got there. So I sold the strangle. I sold calls there. And then I was selling puts 75, 80, between 80 and 75. So I was doing this range. The market, when typically when there's a lot of volatility, which we did get in November, those options become very expensive. You can sell them. That's another income strategy. Also, I didn't mind buying Bitcoin for 80K, so I sold a bunch of puts there. If I got put the underlying Bitcoin in this case, good. I want to buy for 80K anyways. You never do, by the way. I learned from options traders. Oh, if you want to buy something, just sell an option. You never actually buy that price though, unless you don't want to buy at that price. So it's not ideal, but it is a good income strategy. If you own Bitcoin, you can also sell calls against it. I own some Bitcoin still. I was selling calls against that. You also buy Bitcoin based on liquidity trends, which is what we mostly discuss here in cycles. That's a long-term play. I also want to trade the short cycles in Bitcoin, the short-term cycles, that is. So 5 days, 20 days, in and out very quickly. That's also diversified. It correlates with the broad market trends, but it is different enough that it's a completely way to allocate money to crypto. So you could be trading the same 10 assets in a bunch of different ways, and that gives you different trading outcomes depending on circumstances. It's not ideal sometimes. I will be honest with you. I was just doing some end of the year review of all my trading strategies, and I did notice that some strategies worked very well, others didn't, and I ended up having a mediocre year. It was okay. I made some money, but not a lot, because one of my income strategies was not actually performing, and it was hard for me to tell that it wasn't until the end of the year when I could just look at everything I did. Because sometimes these strategies get so complex, you just don't know what's happening. And then you say to yourself, okay, this is my model. This is how it should work. I'm just going to follow that. It's the same as any other trading strategy. But then at some point, when enough time has elapsed, you can review and go, oops, I didn't make any money. But that's how I like to do it. That's why I'm launching all of these vaults on Hyperliquid, because most of these strategies, I think they're too much for a human to execute accurately. You could try and simplify the strategy, which Perry, uh, oh, you said something. Sounds like you're saying diversify means strategies more than underlying assets. Yes, Barry, that's exactly what I'm saying. I think diversification is mostly about strategy and not necessarily what you're trading. I learned that from Tom Sosnoff at Tasty Works. He retired now, sadly, but I listened to him for many years. I would recommend the show to you. I think they're still doing the show, but without him, and he was the only game in town, in my opinion. But I learned that from him. He would always say, it's about strategy diversification, not necessarily what your underlying. So I can trade Bitcoin, ETH, and Solana. I mostly trade Bitcoin anyways, but in a bunch of different ways. And that always means that diversifies your portfolio, in my opinion, a lot more. Um, a lot of strategies require automation, in my opinion, especially the directional stuff. Perry, for instance, the day trading, I think I shared this with you on a private message, but the day trading that you shared, based on my testing, if you want to really get the outcomes that the data suggests, you need to trade sometimes 100 different things in a single day within a 2 hour period. I don't think anybody can do that. Now you can try and simplify that and say, okay, I'm just going to pick the top five. But the top five doesn't really necessarily mean that you're going to get the expected result. You could get killed for picking those top five, versus if you do everything, you're actually going to get better results. Now, can you do 100 trades in a 10-minute window and then 2 hours later close the same trades after in the same 10-minute window? Maybe, maybe not. I can't. If you have a job and you want to do this, you cannot. Day trading is a full-time job. So that's why I've automated a lot of these strategies. I don't talk about these a lot, but I do want to bring up the fact that out of the three that I'm testing based on cycles, now that the year has ended, and you can find them on Discord. Two of them have outperformed, and they have performed according to expectation. So the one that uses a 20-day cycle made some money in a time period when Bitcoin is down 15%. I think I launched it in May 20th. So it's right here. This is May 20th. This is it. This is May 20th. Bitcoin is down 15%. The strategy is up 6. The strategies are designed to beat buy and hold Bitcoin. So it's doing its job. It's making money while the market is down. Also, it was a horrible year, especially since I launched the strategy. It was horrible. The fact that it made money means it is working. The other one is down 5%. Same time period. No, actually, it's since June. It's June 26th, I think. There you go. So about 15%. It's about the same. Bitcoin didn't change that much in that time period. It's down 5 or 4, something like that, whereas Bitcoin is down 15. That's expected. That one uses a 5-day cycle. The 5-day cycle strategy, based on my testing, does tend to follow the market a bit more closely. In other words, if the market is down, the strategy will be down. If the market is up, the strategy will be up. But it should still have beaten buy and hold, and it did. The last one that I did, so that's the third strategy that I deployed. I think it's keeping up. It's not doing well, so I'm changing that one. I didn't have high hopes for that one, but like I said, strategy diversification is important, and that third and last strategy that I launched was very different. It traded markets in a very different way compared to the traditional cycle approach, which, as you know, probably by now, I like to just do the breakouts. So I just like to buy something that, I don't know, here's a 20-day cycle top, and if the market rallies above it, right there, I just buy it. Not as simple as that. I use my algorithms to tell me when I should be doing this and when I should not be doing this. Right now is the time when I should not be doing this. So I don't think the strategy is buying Bitcoin, for instance. You can check if you want. It's the 20-day strategy 1 out of 2, I think it's called. The 2 out of 2 is buying. It's a lot more aggressive up until recently. Then I changed it completely. And here's one of the benefits of using algorithms to trade. You find things that make no sense to you, but based on testing, they work. For instance, I discovered, and I have never launched or traded this live. You're not going to find it anywhere on anything that I do, but I just want to share it with you because you're my private group. So one of the things that I discovered is that one of the best ways, and this probably applies across all markets, but one of the most profitable trading strategies apparently is, let's say, whatever your entry settings are, like whatever you use to enter the market. Let's say you buy it here. And no, actually, let me give you a real live trade. So one of the trades was buying here. It bought there, but then it sold after there was a long enough rally. So that makes no sense, and you can only find that with testing. So it would buy here because whatever, I think there was some VTL that was crossed over. So it bought the market, it bought Bitcoin there. But then it sold here, and it barely lost money. In the middle of that, there was a lot of volatility. The market went down, then it went up, it went like this, then it went like this, and then it went like this. So completely directionless. This is when I launched the vaults. I mean, great timing on my part. It was just a choppy, horrible. By the way, this is the worst time for me to trade because swing trading strategies, you want some type of breakout, but between May and call it October, every time we got a breakout, that was the top. So not the best time to trade. Still, the fact that they managed to make some money or not lose much is a win. I think of it as a win. So the market was doing all of this, and it was only until this rally here between late August and late September, call it early September, late September. This is a long enough rally, and then it sold because the rally was long enough that I could draw VTLs. Let me be very specific. That's why it sold. There were some VTLs that were crossed at that time. And so apparently, and by the way, this is thousands of trading strategies across 15 different assets that I've tested this on. And usually, this is true. where no matter when you buy, if you wait for a decent enough rally that is sustainable, and use that as your exit, apparently that leads to very good results. Now, personally, I've never launched these strategies until recently because they make no sense to me. What if the market crashes and then you get your decent rally? Would that work? Maybe. Apparently, it does. So just sharing that with you, because I'm guessing most of you want to trade eventually, or I mean that's why you're here, right? So that's something that I found that I discovered. It reminded me of a video that I watched years ago where an AI was learning to play this game. I think it was Lords of the Realm, LOL, I think it was. And it was learning to play against humans. And what the AI found and by the way, I developed this algorithm with an AI. So this is it reminded me of that because it's these counterintuitive things. So the AI was learning to play LOL. I don't want to call it LOL because that's the other thing. It was learning to play this online game, competitive game, 1v1. So it was always PvP, 1v1. And what it learned is to take a lot of hits initially. So to play very poorly initially until the health of the AI character went down to like 5% or something like that. Then it would destroy the human because it found, apparently, that when humans are about to win, they get sloppy. And that's when you can beat them. That's what the robot found. This reminded me of that a little bit in the sense that what the algorithm was saying to me is it doesn't really matter when you enter a position. You should only exit after the market has had some sort of rally. These are long only strategies, by the way. So this is totally counterintuitive. Most people say trade with a stop loss. My testing shows actually, if you use a stop loss, your results will be worse. For the most part. In fact, I think this is true across all strategies, even though I've personally never done it because that makes no sense to me. And it's not always true. And there's a big caveat I want to discuss here in just a moment. But this is what it found. It found that if you want to exit a position that you entered into, you should only do so after a decent rally. In other words, you should only sell into strength, never into weakness. If you're long something, you only sell it after it's gone up. You never sell it after it's gone down. Isn't that counterintuitive? That's not what you're taught. You're taught, hey, if it's crashing, don't catch the falling knife, whatever. Well, that's not exactly the same, but it's like be patient, wait for that rally, wait for that statistical fact that guarantees if something is going down a lot, it's going to go up at some point. Then you're free to exit your position. That actually leads to much better results. Again, sharing this as theory because I personally never studied this, but I am now, and I want to see if it's true. Now, in my opinion, and the reason I haven't done this is because this tends to work on assets that are not down 99%. So it doesn't work on the likes of CRV. This works on Bitcoin very well. You wait for the rally and then you sell. Even if you sell for a loss, you always sell into strength, never into weakness. This works with Bitcoin. It works with Ethereum. It works with Solana. It works with things that have, let's call it a proven track record of not destroying your money. If it's something goes down a lot, this approach doesn't seem to work. You should sell whenever it breaks down. Problem is that leads to another issue is asset selection. What should I apply this logic on? And in crypto, since alts, as you know, this is my view on alts, most of them suck. Most of them will never make any all-time high again. Apparently, that's not the right approach. So if you ask me where should I do this? If I'm trading my positions, I'm down. I know one of you, I know you're here, dude. So this goes for you. Even if you're down in your positions, you should only sell into strength. Even if you don't end up making money, but waiting until breaking even, for instance, on an altcoin, probably not going to happen. However, selling after a crash, a terrible idea, according to my research. You should wait for that rally. I would only single out a few assets where I think you can apply this, where I think you can do this profitably. Whereas in most assets, in most altcoins, you should still do this, but you're still going to lose money just because you need the asset to do something, right? If something is crashing, you're not going to make money on it unless you're shorting it. Let's see. One of the worst altcoins I've ever seen is Usual. I don't run my model on usual, but I'm pretty sure if I did, the algorithm would say, you know what, you should, if you want to trade this one, you should sell it immediately as soon as it begins to go down. If you want to have any hope at making anything, this coin has too much issuance, which is a problem across most of the altcoin space. They issue too many coins, and I've been talking to some other, let's call them altcoin researchers lately, and I've asked them this question. Hey, what do you think about issuance? Isn't issuance a problem? Many of them share that with me without me even asking. Many of them said yes. Actually, now you mentioned that, yes, the fundamentals can be fantastic, but the problem is they're issuing too many. And if you're an altcoin issuer listening to this video, please, whatever your tokenomics are, you do not incentivize activity by minting a ton of tokens unless the issuer understands that by issuing too many tokens, the token is going to go down by 99%, and they don't care because they're just trying to attract liquidity and they're selling stock to VCs or whatever. That seems to be the way crypto is going nowadays. It's VCs and private groups, and the token is just exit liquidity for insiders. That's why they don't do well. I could go on. I think Pendle, which is a phenomenal application, suffers from this. It's a great app, but the token is never going to rally. I'm making, until recently, I was making like 30, 50% APR just staking Pendle, which is ridiculous. And this is why it doesn't trade very well. CRV is the main offender of this. They don't fall for the stupidity of saying that, oh, because the way CRV tried to fix this issue of too much supply is, oh, you lock it for 4 years and it gives you voting rights. And that reduces supply, which will help the token price go up. Nope, it doesn't work. Here's what CRV has done in its entire history. Here's what it has done since they launched this. They call them voting escrow tokens. This is what it's done. Nothing. Honestly, if there's no reason to own the token, the fact is that marginal supply that enters the market makes the market crash, period. And again, I'm talking to LPs, people who provide liquidity to all of these protocols. And I ask them, what do you do with the token? Do you hold it or you sell it? No, they sell it because that's how they cash out. And they're mostly hedged too. So they buy CRV, for instance, and they hedge it. They don't technically own CRV. And whatever emissions they get, they sell immediately. And so if you're an altcoin maximalist and you have a bunch of altcoins, your exit liquidity, you're just being dumped on by LPs, VCs, insiders, the team, everybody else is selling to you. And so the token is never going to go up. There was another one. So circling back to DeepBook, which I was recommended, not going to say by who, but whatever. It was recommended to me, so I bought it. I never thought this was a good trade, by the way. Never. Not for a minute did I think this is a good idea. But I still did it. It's a small position. Hey, maybe some altcoins are going to work. I haven't even looked at what issuance looks like on this one, on DeepBook. This is supposed to be the liquidity token for SUI, AMMs, and other DEXs. Now, my understanding is when you provide liquidity, and this could be completely wrong, by the way. I may be completely wrong about this. But I think the way this token works is when you provide liquidity on SUI DEXs, instead of getting fees, you're getting this token. That's why this token has done nothing. That's why this token will never do anything, because it's exit liquidity. This is how liquidity providers cash out. So we'll never rally. And again, I haven't even looked. And if you're watching this video on YouTube or you're watching it now, fact check me. Just see how many of these are being issued. And I can guarantee you it's at least 20%. That's why this thing does nothing but go down and will continue to do nothing but go down. And this is the biggest problem with altcoins in general. There's very few altcoins that do not suffer from this. Even Solana. Oh, look at this. I need to delete all this. So even Solana suffers from this issue. Solana has low fees. We all know this. The problem is fees are how validators get paid. So if you have low fees and not enough activity, and Solana is not there in terms of activity, right? So it's low fee per transaction. In theory, if you have enough transactions, you should be able to reward your validators that way. That's how Bitcoin or Ethereum reward their validators. It's through fees. But Bitcoin is still relying on issuance, but the issuance is not as ridiculous as Solana. Solana in 2025 was more inflationary than CRV, than Curve. Let that sink in. Higher inflation rate than Curve, which is widely recognized as a shitcoin. So this is the problem with Solana. This is why I believe Solana is not doing very well. I invested into Solana early in this bull market, but then I thought to myself, this will probably stop when the hype dies down because this growth is not organic, it's hype. Or rather, it's repricing. I think Solana is one of the best and most widely used. Actually, that's not my opinion. It is one of the most widely used blockchains in the world, more so than Ethereum, I think, still to this day. I think they did that kind of $1.5 trillion in transactions in 2025. It's a thriving ecosystem, don't get me wrong. And I think they're going to solve this problem eventually. Right now, they're issuing too many tokens to pay their validators. In other words, sure, you're paying low fees, but it's inflation that's leading to this type of inflation is how validators are rewarded. It's kind of like a government, right? Your taxes are low, but government is bloated. So how are they paying for this bloat, all this waste? Well, they're paying for it by minting currency. The way they do it is they issue bonds, and then the central bank, which started also in December, the central bank will buy those bonds. They're minting currency, essentially, which is why the currency keeps going down. Well, guess what? Blockchains haven't figured out a better business model either. It's just copying government. It's like, okay, your taxes, in other words, your transaction fees, we're gonna keep them very, very low. We're just gonna issue a bunch of tokens. The problem is that makes a token a horrible investment. And no, I'm not saying Solana is a horrible investment. I think Solana will eventually have so many users and so many people paying for transaction fees that they're going to get through this problem. But right now, Solana has this problem, which is why I'm not so bullish on it. Beyond that, just using pure cycles. This black line, I think we went over this last time. If we didn't, we should. This black line here is a 320-day cycle VTL. And if whenever it's crossed, that means the 4-year cycle has stopped out. So early in 2025, I knew Solana was done. And just based on that fading momentum from the 4-year cycle, from the crossing over of this 320-day cycle low VTL, just from the crossing over of that VTL, I knew that at the very least, the hype around Solana would die down, and then you have to start worrying about the inflation. So once the hype dies down, once people are no longer super excited about Solana and all things Solana, which you can agree, this happened around this time, early 2025, that inflation is going to eat away any chance at a profitable trade that you could possibly have. Now, again, this is one of the tokens that I trade the most, and I think it's gonna continue to make new all-time highs in future cycles. I could be wrong about that, but that depends on whether or not they can figure out how to attract so many users that they can bring down that inflation rate and still have a thriving ecosystem. They need that inflation to come down. Otherwise, this will not rally. It will not be organic. There'll be cycles of hype where Solana does extremely well, but then it's going to die down again because that inflation eats at you over time. That's what's happening with fiat all around. Anyways, and with that, let me circle back to Bitcoin and the current outlook, right? What is the yellow? So Perry's asking, what is the yellow line on the chart? Central bank liquidity. Maybe open the drop-down menu on the upper left corner so we can all know the time. Equals to the power of 4. I'm not sure what you meant by the power of 4, Perry, but yeah, this is central bank liquidity, and these are the settings you should use. And I just want to note that eventually we're probably going to have to switch out of this metric. For now, this seems to be what Bitcoin tracks, central bank liquidity. The reason I call it central bank liquidity is it comes from this indicator called Global Liquidity Index, GLI. Make sure you take note of that, GLI. And then what you do, when you bring up this indicator in TradingView, which is free for everybody to use, by default, it will have, I think, I could be wrong, but I think that by default, they'll have all of this turned off. They'll have Federal Reserve, Treasury General Account, reverse repurchases, RRP, ECB, PBC, the People's Bank of China, BOJ, and smaller central banks. You want to turn this one on too. It says smaller central banks, but there's a lot of central banks in there. If you look at the code, you can see how many they're getting data from. You turn all of these on and you turn off all of these. So smaller M2, just basically turn off M2. Get rid of M2. In my research, I found that M2 is mostly so all of this is in dollars. This is the global reserve currency, so we value everything in dollars. And M2 is basic, it just grows. It just goes up. No matter which country you're looking at, M2 tends to go up. The reason if you bring up M2, which I can do so quickly here, so let me show you something. Just because when I found this, I was like, yeah, okay. So M2 is this. And M2 goes up. So this is what M2 looks like in most countries. Let me show you. It looks like the M2 of the United States. Boom. There we go. It looks like this. This is what M2 looks like. Do you think there's any correlation between Bitcoin and this? No. Now, why does it look like this when I turn everything on? It looks like something that you could follow. It looks like this. All right. Why does it look like this? Like something more, I don't know what to call this. Like an indicator. Why does it look like an indicator? Exchange rate. So they all look like I just showed you. They all look like the M2 of the United States. It's just a straight line that goes up. But then you have to turn that into dollars. So when you convert to dollars, it looks like this. When you take Chinese yuan and turn them into dollars, it looks like this. When you take the Japanese yen, let's single out Japan. You take Japan. This is Japan. Let's see what M2 in Japan is looking like. It looks like this. All right. It does correlate. Don't get me wrong. It's not like it doesn't work. But what you're looking at here is the exchange rate, the effects of the exchange rate, the dollar versus the yen. And the dollar versus the yen, I believe, well, this means the yen has been going up. That's basically what it means. Again, not that it doesn't work, but it gives you at least a sense of why this works so well. It's the exchange rate. So when the dollar weakens, liquidity goes up, and that helps Bitcoin. When the dollar strengthens, liquidity goes down. Actually, in this case, I think the yen has been doing pretty well, so that should have helped liquidity, and it's going down. So Japan is not maybe the best example, but it is true in most cases. But in most cases, the reason M2, I believe, doesn't work maybe so well is because it tends to be dominated by just the exchange rate of the dollar versus other currencies. Again, maybe the yen is an exception because I do believe, let's look at the exchange rate for a minute. I don't have the yen here. I do have the yen. There we go. So the yen has been, oh no, right. So I was right. See, I was right. So the yen has not been doing well. You see how they correlate kind of, this should be an inverse correlation, by the way. You need to look at it this way. I don't want to mess up my point because it's still true. I actually looked into this. You see how they're inversely correlated, these two lines? This is Japan M2 versus the Japanese yen. Actually, this is a good example. They're inversely correlated because this is how we measure liquidity. You do this. Oh, come on. This is how you should look at it. There we go. You see that? This is the yen. Now, this is Japan M2 versus the yen. Okay. Do you notice any difference? There are differences sometimes, but for the most part, you're just looking at the exchange rate. This exchange rate effects on liquidity. That's what you're looking at. And yes, it does work, but just be aware that whenever you see somebody use M2, they're basically using a dollar basket. They're weighing the dollar exchange rate based on the M2 chart. That's basically, it's like a weighted average of the dollar exchange rate versus major currencies. That's what M2 is. That's why I don't think it's the best measure for liquidity. It has this basic flaw. I mean, look at this. This is the same chart. So it's completely dominated by that exchange rate. In other words, when the dollar weakens, liquidity goes up. And shout out to Raoul Pal or Michael Howell. Any liquidity analyst will tell you this is true. But whenever the dollar weakens, dollar liquidity goes up, and that helps risk assets. That's kind of a base effect, though. I mean, what's happening there is just the asset is just rebasing. Also, the dollar is weakening against a bunch of currencies. Guess what? It is weakening against Bitcoin. It is weakening against other things as well. So whenever the dollar goes down, assets go up. That's called debasement of currency. That's what M2 tracks. I'm not sure where I'm going with this. It's just something that I learned recently. So, oh, actually, M2 is just the dollar exchange rate plus the M2 of the United States. But that's what it looks like. Whether central bank liquidity, I like it more because it tends to move more, and it tends to show what marginal money is doing because it's like M2 growth is like background noise. It just goes up. It's background noise. The only reason you see go up and down has to do, like I said, with the fact that the dollar goes up and down. The dollar goes up and down based on monetary policy, interest rates, and other things. Maybe that's why bonds work so well for predicting liquidity because bonds affect the exchange rates between currency, interest rates, in other words, affect the exchange rates. So just a little bit of a background into why I prefer to use central bank liquidity now that I've been using it long enough. So central bank liquidity, in my opinion, it tends to work better. And what it's saying now is quite interesting. So this is one of the main takeaways, and I've shared this with you all before, so you know this, but I've highlighted, and this comes directly from the PDF that Perry created on the Discord channel. You can find it there. These two dates. So I highlighted these two as the candidates for when we're likely to see this low lineup because every time, and this is true going back to 2010, this is not a new phenomenon, but every time central bank liquidity rallies, as we're seeing here so once we apply the 84-day offset, we see a rally in liquidity between the 12th of February, we're not there yet, and at the very least, March 30th. I believe it is exactly the 30th, actually. So March 30th. We see this rally. It's not much yet, but guys, now that Bitcoin is below the 320-day cycle low VTL, this is mostly what we can hope for in terms of rallying. For now, the rally is the strongest we have seen since April. So since this rally, actually late March. This was a multi-month rally, and you can see how it lines up perfectly with the only rally we had in 2025. It took Bitcoin from 75 to 110. And then, actually 120. So from 75 to 100, and let's call it 125. That was tested a bunch of times, and then the market turned down alongside central bank liquidity. It didn't line up perfectly, so there were a bunch of times where I was a bit confused as to whether or not the market would rally or stall or whatever. But for the most part, now that we have, with the benefit of hindsight, we can see that it was generally true that as soon as CBL turned sideways, so did the market. But the market started to go down a little earlier than suggested by central bank liquidity. Started turning down here in October, whereas central bank liquidity told us we have a bit more time. That, at least personally for me, what I did is I opened a bunch of Bitcoin positions here following the crash, and I ended up selling them for about the same price. I still hold some of that simply because I thought there was a chance that this showed a prominent rally, and I thought, okay, the worst case scenario here is I get out for break even because the market will go sideways for a while. Little did I know that, and actually this is true in general, but whenever central bank liquidity is sideways, there's a chance that Bitcoin just falls. Just because liquidity is not growing. You need liquidity growth in order for prices to grow. And good news is that's behind us. Good news is that's coming. So we have this liquidity growth. It's not super strong yet. And I'm wondering if it will continue to go up. Part of this, I haven't checked this, but part of this is definitely dollar devaluation. So part of this is the dollar is going down again. That's why central bank liquidity also goes up. But it's not just that. It's also one of the main components of liquidity nowadays, or at least central bank liquidity, is this thing, the so-called RRP, the reverse repo facility. Reverse repo facility is basically money that the US Treasury has deposited at the Fed. And it's not growing by as much, but it is growing. It's growing significantly enough. And it'll likely continue to grow. Actually, this is a reverse of the Treasury General Account. So these are the deposits. This is the reverse of the deposits that Scott Bessent has at the Fed. Whenever this line goes down, that means that the Treasury is depositing money at the Fed. They're selling bonds, and so, which sucks up liquidity, but they don't put that liquidity back into the economy. Instead, they put it at the Fed. They're doing QT. So that this is Treasury QT, and it's a very dominant force nowadays in liquidity. You can see how the alignment is not perfect, but it's definitely there. In fact, this Q2 rally we had in Bitcoin in 2025, we could attribute that to the TGA. The draining of the building up of the TGA, in other words, the second half of the year, we saw the Treasury sell a bunch of T-bills, and they would stash all of that at the Fed because they knew the government shutdown was coming. And that drained liquidity from the globe, and that led to Bitcoin going down. That's reversing now. That is reversing. So you're seeing this draining of the TGA, which leads to this line going up. Remember, this is the reverse. The reason we look at it in reverse is because when the TGA goes up, that's bad for liquidity. And when TGA goes down, that's good for liquidity. So we plot it in reverse. Now, this I think is leading to like the Raoul Pals, the liquidity people. Not everybody. I don't think Michael Howell is on that boat, but a bunch of people are saying, hey, liquidity tsunami is coming. This cycle is extending. Don't worry, mutable market is coming. I don't think so. I just don't think so. The cycle, first of all, I don't believe in the 4-year cycle as a new phenomenon, whereas a lot of people have caught on to the fact that there's a 4-year cycle as of 2008. They think it has to do with interest rates going to zero, the great financial crisis, the US election, and a bunch of other factors they think are leading to the existence of a 4-year cycle. But here's the problem. Hurst in the 1970s identified a 4-year cycle going back to the late 18th century. And he only went back to the late 18th century because he looked at the US stock market, and that's all he could find. That's all the data he had. There's a 4-year cycle in the planet. There is a 4-year cycle. And I don't know if these people have noticed, but whenever they talk about the 4-year cycle, they talk about a lot of things that line up in this 4-year window. So I ask all of you to think, does the cycle come first? Or do all these factors come first and then they create the cycle? Well, I use geocosmics. I literally use planets to forecast the market. I do not think that the 4-year cycle is being caused by the US election or the global financial crisis, or the fact that the average duration of your average government bond is about 4 years. I don't think it has to do with any of that. There is a 4-year cycle, and a bunch of things line up with it. In other words, the cycle first, the events second. That's another way of saying the 4-year cycle will never change. It might vary in its duration. So when Hurst was doing his research, it was a 4.5-year cycle, 54 months. 4.5-year cycle. That's what he found. It may well be that it's actually a 4.5-year cycle, not exactly a 4-year cycle. Bitcoin doesn't exactly run on 4 years either. It's a little shorter than that. So it's not perfect, but that's just the principle of variation. You can find that on lesson 1 on YouTube if you don't know what I'm talking about. Cycles vary, and cycles like the 4-year cycle vary very slowly. They don't vary slowly. They vary over, let's say, a cycle can hold its average duration over a period of, let's say, 10 iterations. For a 20-day cycle, that's not much. That's 200 days. That's less than that's like 6 months. But let's say a 4-year cycle is holding its current average duration for a period of 10 iterations. That's 40 years. So that's a lifetime. For an entire lifetime, a 4-year cycle could be 4.5 years, or 3.5 years, or 5 years, or 6. And that's normal. In fact, I think the stock market is at 6 right now, and it's continuing to be at 6. It just has this variation. Now, this comes directly from Hurst. This is normal. These cycles, they do vary, but they're still there, and they're not going to change because liquidity trends are changing, which is what people are saying. I think that they're misidentifying what causes the cycle. They're saying, well, the cycle is being caused by liquidity, and the cycle to liquidity is changing. Therefore, Bitcoin is going to behave differently. The way you should look at it is Bitcoin has a 4-year cycle. No matter what happens, there will be a 4-year cycle in Bitcoin, period. And it's not going to change. So these hopes that we're having this liquidity rally and that the rally we didn't have in 2025, we're going to have in 2026, not going to happen. Some of those same people have been saying that since 2023. They've been saying that for literally years, that it's coming, it's coming. No, it's not coming. It's just not coming. Well, at least I don't think so. Um, and I'm pretty sure 2026 is not going to be the bull year that we didn't have in 2025. No, the more logical explanation is that the cycle is getting flatter because more liquidity is entering the market is becoming more professionalized, and therefore the last year, in my opinion now, the last year of a crypto 4-year cycle, the up phase of that 4-year cycle is flat, it's sideways. Whereas before we used to have 3 consecutive up years. In this case, we would have had 23 was an up year, 24 is an up year, 25 as an up year, and then one down year, 2026. We're there now. What we're having now, and this goes back to 2020 because it's true in 2020, is we have 2 years going up, 1 year's going sideways, and then the last year is down. So the last year of a 4-year cycle, the third year rather of a 4-year cycle is shitty. It's just this. This is the same thing that happened. This is 2021. This is the third year of the last 4-year cycle. Shitty. It looks the same. Looks exactly the same. So the cycle has already changed. That's why I was not so bullish on altcoins, because I noticed that this was true also last cycle. The altcoins did not do so well. The only reason people thought they did amazingly well is because a lot of people entered into crypto in 2020. So they were not around in 2016 or 2017. I was. 2021 is nothing compared to 2017. Nothing. The average altcoin in 2017 went up 300,000%. The average altcoin in 2021 went up like 6,000%. That's not even close to the same. So I noticed, oh, there's a pattern here. It's getting worse. And you fast forward to 2025, it got really bad. Not even alt season anymore. That's what leads me to say, hey, I don't think we're going to have alt season anymore. And the reason for that is I'm noticing the pattern going all the way back to 2016 and 2017, where alt season was amazing. Then we had a bit of an alt season in 2021, then no alt season in 2025. Notice the pattern? It's getting worse and worse. That's the pattern. Is it going to get better? No. And the reason it's not going to get better is this was ridiculous. 2017 was absurd. These altcoins, they don't exist anymore. They didn't build anything. It was hype. It was a bubble. It was great. If you had enough capital to deploy, it was amazing. I didn't, by the way. I didn't have a lot of money in 2017. So I invested and I made the least I made was 10x. I didn't make a lot of money because I didn't have a lot of money. I made a lot more money 2020 and 2021 because I had a lot more to invest. Partly because I made some money in 2017. But it was much, much worse. And now it's totally gone. And the reason it's totally gone is the market is maturing, guys. It's maturing. If you don't have a working product, if your altcoin is not real, you're not going to do well. If you're minting 20, 30, 50% APR just to attract liquidity, that altcoin will never do anything. And most of these teams, they don't think beyond that. And I've talked to some of them, and they don't have an answer. I've talked to some, even at this Real Vision conference that I'm gonna attend. I talked to some issuers of tokens. They explain to you how the token will be given to you for free, just for doing something. But then when you ask them, so why would I buy this coin? No answer. Sometimes you're gonna get a discount. Okay, a 10% discount. Great. You think that's gonna create organic growth? No, it will not. It won't create anything. So there are very few tokens that actually have this figured out. Most of them don't. So that's why no alt season. That's why I don't think that because I'm being pessimistic. I'm just saying, hey, I was around in 2017. Most of those tokens were worthless. I was around in 2020 and 2021. Most of those tokens were worthless. The tokenomics were completely broken. They're still broken. They're doing the same thing 5 years on. 5 years later, the token issuers are doing the same thing, issuing a bunch of tokens and saying, don't worry, we're going to lock them for 4 years. That's going to make the price go up. It doesn't. That's the problem. It doesn't. There's no data that proves it works. Buybacks do work, though. That's what BNB and Tron do. They buy back their own token. That does work. That creates growth or demand for the token. That does work. Very few are doing this because teams don't want that. The token is just exit liquidity. We're creating this thing and we're selling it to people, and then we're going to sell it to them. Oh, sorry for that. We're going to sell it to them, and that's how we're going to cash out. They were doing that in 2017. They're still doing that. if you want to ask me, when do I think alt season is starting? Real alt season, where you can buy very cheap altcoins that have a chance of doing extremely well once they fix the tokenomics. Now, what does that look like? Back in 2018 and 2019, when I started at Wise, I was saying these need to become stocks. So I need to have shares in a company. So I love XRP, but XRP is not shares in Ripple. If XRP were shares in Ripple, they can't do that because that makes them a security, by the way. That's why they don't do it. Then that maybe I'm participating in the actual growth of the company, and so I want to participate in that. Layer one tokens are different. Those are the only altcoins I think of investing in, because layer one tokens, if the network attracts users, they pay more fees and the token goes up. They have to own the token. So layer ones, which is base infrastructure, layer ones are exempt from this rule that I just mentioned. The problem with layer ones is there's so much room for there's room for so many, right? So we have Bitcoin, layer one, payments. ETH is smart contracts. We have Solana, which made it. It made it into the top, one of the most widely used layer one. So they have enough users now. They have momentum. That's why I think Solana eventually fixes its problems and continue to make new highs. But let's call them, I don't know if they're called layer twos, but let's call them layer two tokens. The applications, Pendle, Chainlink, I don't know, usual. I'm just going over this list here. They don't have this feature where you have to own the token for some reason. No, for the most part, it's just exit liquidity. So that's why alt season is broken, because the tokenomics have been broken since 2016 and they have not changed. Why? Because this model of minting and issuing a bunch of tokens and selling them to the public, it works, but it works specifically for the token issuer. It does not work for the owner of the token. If you own the token, you're just exit liquidity. Oh, I think let me just, there we go. You're just exit liquidity. And that's why it doesn't work. Why are they still doing the same thing? Because the people who are selling the token to you are making money from you. You're not going to make a dime. That's the problem with crypto. That's the problem with alt season. And I know that you haven't asked me about alt season, but that's why I'm so bearish on it, because the tokenomics are completely broken and I'm not seeing any real effort at fixing them. Even Trump launched a meme coin. What's it doing now? Did you really think the Trump meme coin was going to do a 500x and then continue to go up? Why would it do that? There's no reason to own, trade, transfer, or do anything with this token. By the way, the reason I worry about Bitcoin long term is there are no applications on Bitcoin, and we have the likes of BlackRock just buying and holding. That's not what Bitcoin needs. Bitcoin needs what's this called? Velocity. It needs money velocity, just like any other currency does. You need to do something with this thing. Otherwise, once the inflation runs out, this thing will stop moving because no one's doing anything other than hoarding it. It's not gold. So I heard that Michael Saylor wants to do applications with Bitcoin, so I wish him the best of luck. Actually, that's the best move he could do, because you need utility. The token doesn't have utility. Eventually, it goes away. So you need transaction volume, you need people paying fees, and that's what Ethereum has, that's what Solana has. That's why these ecosystems, I think, are at least sustainable, even though Ethereum hasn't done that much lately. All right. So moving on to questions. I know it's a bit of a rant, but hopefully you're enjoying the rant. And yeah, whenever you ask me about altcoins and why I'm so bearish on them, that's the reason. Tokenomics are broken. All right, so central bank liquidity, hopefully answer that question. We have this growth coming up. Not much for now, but it's gonna make the price go up. Let's see how much. So what you're saying is, what's the essence of altcoins? They are a scam? Most of them, yes. They're not. So I want to be clear here. They're not a scam in the sense that they're trying to scam you. No, they're not trying to do that. I mean, the issuers of Pendle, Pendle is a serious project, very serious, very good too. They allow you to trade interest rate, so it's interest rate trading. So anything that has a yield on it, they create two tokens. One is a principal token, and the other one is a yield token. So they split the yield from the principal, and you can either buy the principal token, which means you have a fixed income asset, or you can speculate on whether or not yield is going to go up or down. I don't do that much, and that's called the yield token. Brilliant. It is actually one of my favorite projects. One of my most widely used applications is Pendle. I love Pendle, but the tokenomics of Pendle are broken, right? So it's not a scam. Pendle is not a scam, but buying Pendle makes absolutely no sense because it's just buying a highly inflationary asset that is being used to incentivize LPs. If you don't know what that means, it's liquidity providers or liquidity pools, but I think it's liquidity providers. So people like myself, I provide liquidity a lot, and I get Pendle as a reward. Whenever I get Pendle, I sell it immediately, and I'm getting a lot of Pendle because the Pendle team, they want me on their pools. And the only way they have to get me into those pools is to mint a bunch of tokens and give them to me. That's how they bring me in. Why? Because there are not enough fees on the platform. Pendle does not generate enough trading fees that I'm going to be incentivized to take my money and put it on Pendle in order for me to make a decent amount of money. The most they can pay me is maybe 3, 2, 3, 4%. I might as well buy a treasury for that, right? But if I want to, they pay me 15%, I'm going to come in. I'm going to give them my money. If they pay me 20, 30%, I'm coming in with my money. But they're going to pay me in Pendle tokens. And every single one of those tokens will be sold because I want dollars. I don't want Pendle. I might want Bitcoin or Ethereum. I don't want Pendle. And so this creates enormous selling pressure, which is why Pendle trades like this. So no, they're not scams. Altcoins are not scams. Their tokenomics are broken. I want to be clear about that. This model where we're going to issue a bunch of coins and give them to people so that they come to our platform, that's all they do, by the way. They all do the same thing. That doesn't work. That's completely broken because it makes the price go down. By the way, you know what happens when the price goes down? Yields come down. So Usual used to be paying 30, 40% for staking their dollar. They have a stable coin. If you staked it, you got the Usual token. It was paying 20, 30%. The reason it was paying 20, 30% is because the Usual token was trading for 20 cents, 30 cents, 40 cents. You basically get a fixed amount of Usual tokens for staking your stablecoin. Let's say 100. You would get 100 of these tokens for every $100, whatever. That's not the actual rate, but just to give you an example. So when the token was trading for 50 cents, you got $50. So for every $100, you get $50 a year. Fantastic. That's a 50% APR. That's roughly where they were. Guess what? That was a lot of issuance. That's why the token looks like this. The way they attracted liquidity is let's just print a bunch of money and give it to people. So they were paying you $50. Guess what? That same $50 is now $2.8. The yield went from 50% to 3% or less. Why? It makes no sense. Completely broken tokenomics. And now there's just nobody staking USD 0++ anymore. Just makes no sense. They never had the fees. And if you go to their website, they're going to tell you, hey, actually, there's plenty of demand for our token because blah, 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 blah. And they explain why people are going to be buying their token. Then you just bring up their chart, which looks like this, and you realize, actually, no one's buying your token, dude. No one's buying your token. No one's touching it. Nobody cares. So no, your tokenomics are completely broken. But the teams will never admit to this. Your favorite influencers who are being paid by these people will never admit to this. This is why the whole thing is broken. Because nobody's saying it to you like it is. Hopefully at Wise, we're going to launch a new set of ratings soon. And we're going to tell it like it is. We're going to say, oh, look at this. Look at the inflation rate on this thing. Sell it. Actually, that's going to be a deal breaker. One of the indicators that we're going to have in ratings 2.0 is exactly this. What's the yearly inflation rate? And if it's higher than 10, sell. Don't touch it. Anyways, not a scam, just broken tokenomics. And I want to be clear about something because you might be asking me, why are they still doing this? Because it works for the teams. It doesn't work for the average user who wants to own the token. But for the teams, they're making killing. They created this out of thin air and they're selling them to you and you're buying it. You're buying it because you think there's a chance it's going to go up. So they're making money off of you and from you. And the reason I'm so emotional about this because I hate that. I don't like that at all. I don't think they should be doing this. They just give crypto a bad name. And crypto's awesome. So there's nothing wrong with crypto. So Barry's asking, is issued liquidity of a crypto is basically inflation, just like any other fiat currency? Yes, much worse though, because in fiat you have users. The users are the population of the country that are using the currency to buy goods and services and pay taxes. In crypto, they're just speculating. There's just a bunch of speculators. There's no difference between a meme coin and the usual token. They're the same thing. Purely speculative, no real value. And fiat is kind of the same. But if I was looking at a crypto asset as if it was a fiat currency, I would say, hey, there's a bunch of people. There's like, let's take Colombia, for instance. Population, I don't know, let's call it 50 million. I'm not sure, maybe 40. Let's call it 50 million. 50 million people are using Colombian peso. They're buying goods and services with Colombian pesos. Let me go to Colombia and see what goods and services the Colombian peso can buy. And you could be bullish and say, look at all the real estate I can buy with this token. So I will be bullish or more bullish on the Colombian peso than the usual token. Colombian peso at least keeps up with the dollar. Of course, when you're analyzing fiat, you need to look at the biggest issuer, the government. Are they running deficits? Are they running? What's the interest rate they're paying on those bonds? That's usually the thing that will determine whether or not the currency will do well or not. And in most of Latin America, they're running perpetual deficits. Currency is just going to keep going down. But yeah, they're just like fiat. It's a tax. That issuance is a tax. And that's why they look like this. I mean, come on. This looks at the dollar over the last 100 years. Only usual managed to do it in a single year. So the dollar is much better than usual. I don't want to single this one out, but this is one of the worst I've seen, right? So the others at least can go up. This one is absurd. All right, so a tax bleeding. So Perry continues. He says it's a tax bleeding the little guys and gals dry while the issuers stay ahead. Yes, that's what altcoins, that's what 99% of altcoins are. That's exactly what they are. If we said a global currency had a 20% or more inflation, it'd be shocking. But we think it's okay on alts. Exactly. But Perry, here's the thing. It's not okay. Look what happens. This is what happens. This is what it looks like when you have a 20% inflation rate. This is what it looks like. Excluding this is the launch. This is the hype phase. People are hyped. There's something new. There's a new token. Then the inflation hits. And it looks like this. And it looks, let's look at it from a cycle perspective. These are 320 cycles. By the way, for those of you who don't know how to get the 320 cycle, I want to bring it up because this is super important to have, especially nowadays. So 20-day cycle, the 320-day cycle filter, in order to find it, remember, you split the duration by 4. So 320 divided by 4 is 80. And then you displace that backwards, important, backwards for a filter. That's lesson 2. There we go. Oh, let's bring it up. This should be black. No. This should be black. Let's make it black. There we go. Okay, so from a cycle perspective, a highly inflationary currency looks exactly like this. Lower highs and lower lows. You see the peaks in this black line, they're 320-day cycle tops. The valleys are 320-day cycle bottoms. And what that inflation rate is doing is it's making each peak lower than the last. And keep in mind, this is during the up phase of a 4-year cycle. This is the up phase. Now we're in the down phase. What do you think Pendle is going to do now that we're in the down phase of a 4-year cycle? The next 12 months are down for the cycle. This asset has already been bearish since early 2024. And technically speaking, if we want to just be very technical and just use the VTLs, right? Once you have the 320-day cycle highs and lows identified, you connect the last 2 lows, and it gives you the 320-day cycle low VTL. When that's crossed, that is a death knell for an altcoin. That's crossed, the altcoin is done. And this one was crossed in early February of 2025. And as you can see, that was the peak. Not only that, that crossover came in after making a lower high on the last two. So this is the February crossover. Let me highlight that with a vertical line. This is the February crossover of the VTL. It came here. As of this red line, the last two 320 tops were this one made in December 24, and this one probably made in March. Yes, March 24, and it's lower. So this one is lower than this one. Super bearish. That is super bearish. And keep in mind, the market was not exactly bearish at this time period. Why is this so bearish if the application is so good? Inflation. That's why. And isn't it ironic that crypto was created to fight the debasement of fiat? And these guys are the worst offenders of them all. There's no one worse than an altcoin issuer. They're minting the most. Now, let me be clear. Many of these have fixed supply. So Pendle has a fixed supply. Eventually, they're going to issue all the tokens. There will be no more issuance. They usually take about 10 years. I haven't looked at Pendle. This could be completely wrong in the specific case of Pendle, but this is true of most altcoins. After 10 to 15 years, there will be no more issuance. The teams are hoping that after 10 to 15 years, there's enough fees on the platform and enough organic users that nobody's going to go away just because they're not issuing tokens anymore. That's the hope. Is that going to happen? We don't know. Here's the problem. For the next 10 years, expect this thing to continue to lose value as that inflation eats away at the principal. Once that inflation runs out, the platforms that have a lot of users, then maybe those altcoins can do well once they stop issuing. In many cases, and again, I don't know if this is true of Pendle, but in many cases, issuance goes down over time. So that inflation rate starts being very high, and it gradually goes down. Still very high until the 2030s, for the most part. And the reason we don't have any of these, the reason all of these issuers are still issuing is it hasn't been 10 years. None of these applications are 10 years old. Most of them are 2, 3, 4 years old, maybe 5. The oldest of them all are 5 years old. So we haven't reached that point where issuance stops and fees begin to feed the system. We haven't reached that point. So we don't know what's going to happen then. But if there's any hope for an altcoin, it will be then, once they're no longer issuing. And to be honest, this new project that I'm taking up at Wise, where I'm going to rework the ratings, I'm very excited to do this because I want to know myself, like, what the tokenomics look like. We're going to be rating, I think, for on-chain data, we have like 1,400 layer 1s and layer 2s. And inflation rate is one of the main metrics I'm going to be looking at. And so I'm going to know like which ones are inflationary, which ones are not. Most of them are, though, in the 15, 20% range, 30%. Even like the likes of Solana, 15%. It's a lot. Now, the way we count inflation is the way we should do it is the change in supply in 12 months. I don't care if it's token unlocks. I don't care if it's actual issuance. I don't care what it is. I just want to know how that supply has changed in a period of 12 months. I just don't care if it's because the VCs are selling and the tokens are unlocking. That counts as supply, liquid supply. It would be like a bit, if we take the fiat parallel, it would be like saying, does it really matter if it's the Fed printing money or the Treasury is unleashing all this money into the market? It doesn't really matter. That's supply that is entering the market. So how that supply enters, it doesn't really matter. So the problem with Pendle, the problem with Usual, CRV, I don't think is there anymore, but Solana still has this problem. The VCs are still selling. They want to cash out. So they're also counting as inflation. That is dormant supply that as soon as it hits the market, it makes the price go down. So there's the issuance problem, and then there's the insider problem. The teams hold a lot of these tokens, and they're going to dump them onto you. There are some exceptions to this. I think Hyperliquid is an exception. I don't think Hyperliquid did this, where there's a bunch of VCs just waiting to sell. They're still issuing the token, though, but the APR is very low, which means maybe issuance isn't as bad. I'm talking about Hype, by the way. This is Hype. And I have not looked at the tokenomics of this, so I'm not even I'm not even recommending this, but look how well it trades. And I believe the reason for this is one of the few that did more of an organic thing where there are no VCs. The tokens were allocated based on people's usage patterns on Hyperliquid, and they're not paying 20% APR. So the Hyperliquid staking is like 2 or 3%, which means they're not issuing a lot, which means this thing could grow. And Hyperliquid is a thriving ecosystem. All of my vaults are on Hyperliquid. So again, I'm not recommending, I don't own any of this. But this is what I'm looking at. This is one where potentially things could do well. However, I did notice that some people were tweeting in this downturn here that the team does hold high tokens, and as soon as they unlock, they're gonna sell. It's a freebie for them. It's a free ride. They got it for free. They're sellers, and these guys are sellers at any price. And maybe that's not true of all of them, but think of that cohort of insiders as sellers. They're not committed. They just want the money. That probably works for free. They probably didn't even get paid to work for Hyperliquid. Now they got an allocation. What are they going to do? They're going to sell. So they're cashing out. And so I think it does have this problem. So no issuance, maybe, probably. Just fact check me. I'm not sure I'm right about this, but I don't think this one has high issuance simply because the APR itself, guys, is a red flag. You go on a platform, it says 20% APR. That's a red flag. Where do you think that's coming from? Issuance. No, not fees, issuance for the most part. The fact that Hyperliquid pays about 2% means there's not a lot of issuance. That's good, but they do have an insider problem. But that's going to go. I'm not so concerned about that part because that tends to go away in a period of 2, 3, 4 years. That goes away as a problem. All right. So why was altcoins always rallying in the previous cycle? What was driving the rallies? That's an excellent question. Hype. It was the belief, and I know this for a fact because I was there listening, and I believed it. It was the belief that at some point this token was going to be used. For instance, one of the ICOs I invested into, I think it was 2018 by then. And by the way, back then it was ICOs. It was not airdrops. It was ICO. It was just give me Bitcoin and I'll give you a token. The reason they're not doing that anymore is because it's illegal. You cannot do it anymore. They go after you. If you say, here's a shitcoin, give me your Bitcoin, they go after you, especially if you raise $150 million, which is what they were doing back then. So it's not like, so this is how the industry matures. People get wiser. And these ICOs, it was blatant. Get me a lot of money and I'm going to give you a token. One of the ones that I invested in was a company called, I don't remember the name. It was like a social media influencer type company. They help influencers and they call NiceHash, something like that. Something like that. I don't remember the exact name. I think it's a profitable business. It was then, it still is. The CEO was brilliant. It was out of Poland. She was awesome. And so she said, okay, let me get into this ICO hype train. And so she took a lot of ETH, $30 million in ETH, and she gave away a coin, a token. What she said is, we need this token because we're going to pay our influencers in Africa with this token. So we're going to use crypto because it takes 10 working days, whatever, 5 working days to send money to Nigeria from Europe. And the fees are extremely high. So sometimes you have to pay somebody $10 and the fee is 20. That makes no sense. We're going to use crypto. I was back then more naive. And I was like, well, that's good. That's a great use case for crypto. It still is, by the way, still is. That's what a stablecoin is for. But whatever, I digress. So they had this token. So they said, well, we're going to be using this token and we're going to pay the influencer in this token. So I was thinking, why not use ETH for that? I mean, why don't you just use Ethereum or Bitcoin? There were no stable coins at the time. They had not been invented yet. So you couldn't use USDT. But you have to ask yourself, why not just ETH? I mean, ETH works. You don't have to use a token. So fast forward like 12 months. Was this token ever used for payments? Nope. They never did. I think maybe because I know somebody who knew the CEO, so I asked them like, "Hey, are they still doing crypto?" I think he told me yes, they're still doing crypto. They're doing stable coins. You see what I'm trying to say? $30 million to get a token that was never used that you never needed. Because you can do that. That Bitcoin can do that. Cross-border payments, are you kidding me? Bitcoin works for that. And if you think Bitcoin is too slow, and I think it is, use ETH 15 seconds. Back then that was really fast. Nowadays you would use a stablecoin in Solana or Tron. That's near instant, right? So the use case was there, but we thought maybe okay, yeah, maybe they're going to use that coin. Maybe they're going to use the NiceHash token, or maybe they're going to use Pendle or CRV. They're going to use it, but it turns out they didn't. People gravitate toward liquidity, which I think if you find my writings at Wise from 2018, you're going to find that this was my view at the time. That why do you need a token for this? In fact, I would read white papers and technical documentation once a week. Me and another colleague of mine, we would do this together. We were doing research, so we were reading all the papers, and we knew the tokenomics, the consensus algorithm, everything about a layer one or a layer two. We knew everything about them. And the fundamental question that I always wanted to answer is, why do you need a token? Why does your use case require a new token? I think 99.9% of projects at the time did not require a token. Ethereum was good enough. Back then, everybody was on Ethereum, and Ethereum was good enough. They wanted to use it for some sort of payment, always, and Ethereum was good enough. The layer ones were an exception. If you liked the technology behind the layer one, for instance, I made a lot of money on Cardano because I like, and I still do, the way it was built. The problem is there are no apps. It doesn't work. It's too slow. It was a complete disappointment. But it's still true that it has an amazing tech stack. Like the underlying technology is pretty phenomenal. It can do things that proof of stake networks cannot. It's very unique. So I liked it for that reason. I thought, okay, if enough users come, ADA is going to go up. They never came. ADA went up anyways. So I got lucky and I made a lot of money and I sold. But that would be one of the things that I would be interested in investing. And by the way, the same guys that did Cardano are doing something called Midnight now, which uses ZK proofs. So it's a layer one that has the best privacy technology on by default. And it is being developed by people who from at least from a theoretical perspective, they definitely know what they're doing. So I'm willing to give them another chance. And I actually bought that Midnight token. I think it could do something. I don't think that IOG and Charles Hoskinson succeeded with Cardano. I think they failed to meet expectations, but I don't know how to put this into words. I'm struggling to because it's like all the building blocks are there for Cardano to be an amazing ecosystem, but it's not. There were some flaws. I am willing to give them the benefit of the doubt, saying, okay, with Midnight, there may have been a lot of lessons learned. That Midnight could be something, one of the most widely used layer ones. That's kind of niche because it uses ZK proofs for private smart contracts. But man, private smart contracts is something we do not have in crypto. Everything is transparent. And the way the industry has evolved over the last 5 years is let's make it faster and cheaper. Sui, faster and cheaper than Solana. Solana, faster and cheaper than ETH. This new one that came out, Monad. I read a whole report from one of the founders. He was just explaining why Monad, I think is the name. Is the name Monad, by the way? Somebody can correct me if I'm wrong. I'm going to scroll down real quick. I think it's Monad. And Monad is basically we're faster and cheaper. We're faster and cheaper than Solana. We can do 1 million TPS. You know who can do 1 million TPS? Visa can probably figure out how to do 1 million TPS. The European Central Bank can figure out how to do 1 million TPS. There's something called a blockchain trilemma, and it's basically this: transaction speed, decentralization. I think it's decentralization. I think it's transaction speed, decentralization, and security. Somebody check the AI if that's the trilemma. What I'm trying to say is this: it's been known forever that if you want to make a crypto asset, a blockchain faster, all you do is centralize. You run less nodes and you demand more out of those nodes. That's how you make it faster. We knew this back in 2015, that if you want to make Bitcoin really, really, really fast, just get rid of 20,000 nodes globally. Just have one or two nodes, and it's going to be really, really fast. The problem is that's not decentralized. Those two nodes could censor any transaction at any point in time. Not only that, the ledger, the blockchain, is fully transparent. And so, yeah, we can see everybody, what everybody's doing in there. And it only takes two guys to figure out, hey, that person needs to be shut down. That's why the ECB doing, it's so funny. The ECB is so incompetent. These guys, these bureaucrats are they're so ridiculous. They said, we're going to do a stable coin, a euro stable coin. By the way, we already have and nobody wants, whatever. But they're bureaucrats and they don't care. We're going to do blockchain. It's the ECB blockchain. You don't need a blockchain if you have a single node. You don't need a blockchain. What you need is an Excel spreadsheet and maybe make it a little faster. You don't need blockchain. Blockchain solved the problem when many actors don't know or trust each other, but they can still reach consensus every 10 minutes. That's what Bitcoin invented. Okay? But then we have Solana, which basically does away with some of those principles, and it's just making it faster. But there's 100 nodes, and they probably know each other running the blockchain. That's why it's faster. The first one to do this was BNB, Binance Chain. Binance, I don't know if this is still true, but when it launched, it was basically Binance was paying people to run the validators. Binance. So I always thought of it as a shitcoin because it's basically CZ is giving money to people and saying, okay, you guys can do this. Is that a blockchain? No, that's not a blockchain. So we kind of, over the past, I would say, since 2020, when the VCs came in, and by the way, this is partly our fault. We don't care about decentralization. We don't care about privacy. We don't care about security. So we gave our money to Solana. And Solana does not decentralize. It's not a decentralized ledger. The Solana Foundation could shut down nodes at will. It's not safe. Don't keep your money there. I don't. I have it in Bitcoin. And Ethereum has a bit of this problem too. The stakers are concentrated, too concentrated. They could censor transactions as well. Not a problem until it is, especially since the blockchain is transparent and everybody knows what you're doing in there. And eventually governments will know. They're slow, but by the 2030s, they'll know. They will know what you're doing on the blockchain. That's why we need privacy. That's why Zcash did so well, because we need privacy. Because the only way to keep this mass surveillance and mass censorship from coming to crypto is to bring in privacy. But here's the problem with Zcash. Zcash is a payment network. It uses cutting edge, top of the line, the best privacy technology the world has ever seen. It is the best ZK proofs, zero knowledge proofs. It is what some Ethereum layer 2s also use for ETH. And so it uses that cutting edge technology to obscure transactions. It's phenomenal, but it can only do payments. I came into crypto because I think you can reinvent the financial system using crypto. That's why I came into crypto in 2016 when somebody gave me the Ethereum white paper. Actually, it wasn't the Ethereum white paper. It was a white paper for an application that uses smart contracts. And though I started looking into smart contracts and I thought, oh, this is awesome. You can build finance with this. And I love finance. I love trading. I love finance. I love talking about it. I'm talking to you all about this. So I love finance. So Bitcoin never did it for me. I wanted something that was general purpose where you can do anything. That's ETH. But ETH is transparent. That's the problem. In 2025, late 2025, this guy, Charles, who's one of the Ethereum founders, by the way, and don't hate me for liking the guy. I actually like the guy. He's building stuff. He was one of the Ethereum founders. Yes, he sided with Ethereum Classic during the hard fork. And yes, he's super eccentric. And a lot of people don't like him. I like him because he believes in crypto and he's building stuff. That's why I like Charles. And now he's doing Midnight. And the thing about Midnight is, it is kind of like Cardano. So it kind of works like Cardano, but Cardano, there's no problem with Cardano. Not they made some stupid mistakes. I don't know why. So nobody, so the users never came. But the potential is there. So now midnight, and the token is night. And again, this is not a recommendation because I'm not allowed to do this. I'm personally buying into this one. I'm gonna buy whenever it goes down. I don't think it's gonna go up, by the way. I'm not saying it's gonna 100x. No, 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 no. I'm buying this one whenever it drops below 5 cents. I bought below 5 cents, and now I want to buy again if it goes below 5 cents. So because I want to see if this will work out. I think it might. It's a dual blockchain where transfers of the Night token are completely transparent, but all the smart contract stuff is uses zero knowledge proofs by default. And the best part is apparently it's embedded into the programming language. So I can write private smart contracts, and I don't know anything about privacy. I can write smart contracts. I don't know anything about zero knowledge proofs and the math and how that works. I don't know anything about that. But they put that into the compiler. So whenever you're writing code and you want certain sections to be private, you just say, I want this to be private. And it uses the best privacy technology in the market. Which, by the way, we knew that it was the best privacy technology in the market back in the days of Zcash, but apparently, and this is my understanding, is the research was not to the point where we could do smart contracts. We could only do payments because the researchers had not figured out how the math works. But now they have. I mean, this has been true for years now. They have. But nobody actually created a private smart contract platform until this one. This is a private smart contract platform, the only one on the planet, the only one that will probably ever be created, unless it catches on and it becomes sexy again, privacy. And there's other launch. Maybe Solana will do it. Maybe Ethereum can do. Can Ethereum do a completely private layer two? Yes, but they're not building it. These guys are. So just throwing it out there. This is the only altcoin that I like. Oh, and I brought it up because there are no VCs involved. There might be probably insiders, but the way it's being distributed is it was distributed across exchanges. It was airdropped, and what else? I think they're running incentive programs now to distribute the token. Do I think it's perfect? No. I think the Cardano team track record is mixed. It's not perfect. It's mixed, but they are excellent researchers. They're amazing. So that they know. I think they're too theoretical. They get stuck in theory and they fail to deliver good products. But that doesn't mean they cannot succeed. And I think they might. And it's a fair launch too. No VCs, none of that stuff. It's old school and it's being written by an old school team. Anyways, let's go back to your questions. So Perry saying, seems to me that Bitcoin's large drop from October to November was early of an expected end of year blow off top of the 4-year cycle. In other words, the market did the opposite of expected and grabbed our funds. So Perry, actually, I don't exactly agree with that. It's just Exhibit A, and the only exhibit I have is 2021. In 2021, I was expecting a blow off top, and it didn't happen. What was the tell that it wouldn't happen? This 50% crash in the price of Bitcoin between April and July. 50%. Now, why 50%? A lot of leverage. A lot of leverage. That's why the price crashed by 50%. Why the leverage? Bitcoin did a 20x. It did a 20x, I believe almost a 20, 15x between March 2020 and April of April of 2021. Where's the high? There we go. So 15x between these two price points. Actually, let's just measure it. How much did it go up? It rallied by, it's not 15. It's 10x, 11x, 12x. It's got 12x. 12x in a year. So there was a lot of leverage. A lot of leverage. Like the average borrowing rate for dollars, 30%. It was insane. And it crashed 50% because of that leverage. But the pattern, notice the pattern. Big crash on a year where the price is supposed to go parabolic. You fast forward to 2025. Pattern looks the same. Big sell-off. Big sell-off. Not a crash, Why? No leverage. Bitcoin went up like 100%. It bottomed at 55. It went up to 105, 100%. So no leverage means no crash. That's why I don't think the market is going to go down 90%. Where's the leverage? Where's the parabolic move? It doesn't exist. So I don't think it will. But the pattern is the same. Big sell-off on a year where you're expecting prices to go parabolic. Now, by the way, 2013, Bitcoin crashed by 80% in 2013, and then it went up 50x. But that was then. That was small asset. If I have a big crash on a year where you're expecting a massive upshot, probably not going to happen because there's not enough time. By the middle of the year, we're still trading at 100K. When is it going to go parabolic? When? I mean, it's going to top out in Q4. It always does. So if you're in August and you're still trading around 100K, you're not going to go parabolic. You're not going to do 200K. Some people were calling for that in May. It was like, no, there's not enough time. There's just not enough time. So I was right about that, at least. I was like, no, where are the buyers going to come from? Liquidity sucks. And we just don't do parabolic in crypto anymore. We haven't done it since 2017. Why are people still calling for this? It doesn't happen anymore. It just doesn't happen. And it won't. An asset that goes parabolic every 4 years, within a period of 20 years, would become the largest asset class on the planet. There would be nothing larger than that. If Bitcoin did 20x every 4 years, it will be trading for like a five, I don't know how much, an absurd market capitalization. There's just not even enough money to take it up there. We're reaching the limits of what money can do to this asset class. It's a $500 billion asset class. It's big. It's not going to do parabolic anymore. And the altcoins, I think we said enough about them. Too much issuance. So then Perry says, exactly as Crypto Euthanasia said on Discord, just so crazy. Everyone was saying 2025 is the year crypto will go parabolic, and nothing like that happened. Just thinking, as everyone is saying, 2026 is going to crash. It's a crash year. The opposite is going to happen. No, it's not going to go parabolic, but I agree, Crypto Euthanasia. I don't think it's going to crash either. It's a down year. And by the way, the reason I'm saying a down year is not because everybody's saying it. I'm saying because my model is saying it. Okay, cycles are saying it. We're crossing below the 320-day cycle, low VTL. That has never failed to produce a high in Bitcoin. Every time this happens, the last all-time high, is a 4-year cycle top. And every time we make a 4-year cycle high, that the price is not exceeded for at least 12 months. So October through October 2026, probably not going to see new all-time highs, meaning in 2026, we're probably not going to see all-time highs. That's what my cycle model is saying. And I will be saying this regard. I don't care what people are saying. They're always wrong. They were calling for 300K Bitcoin. They were calling for parabolic again, even though it hasn't happened. It hasn't happened in a while. Sometimes I've seen some people use log charts to pretend that Bitcoin went parabolic in 2021 when it did not. It didn't. Or rather, it did at first, and then it died. And it's the same thing that happened this time. There is a pattern here where Bitcoin is going up less and less over time. And there's also a pattern where the industry is getting wiser and more mature. And the things that we used to believe in 2017, we don't believe in anymore. And the industry's just wiser now. So no all season because the industry's more mature, and no parabolic moves because the industry's more mature. It just doesn't happen anymore. Not saying that it couldn't. It could. If the macro lined up, it could go parabolic. If central banks really had to print, like if the public debt of the United States hits $100 trillion and 60% of the budget goes to pay interest rates, you're going to see Bitcoin go parabolic again. But that's because the dollar is going to get destroyed. So I'm not sure in real terms how much it's going to go up. So it can go parabolic. It's not like it can't, but not like before. It's not experimental anymore. We have BlackRock buying it, and we have the president of the United States talking about it. It's mainstream. We made it. We are in the mainstream. This is not an undiscovered asset class. Everybody knows about Bitcoin nowadays. So the easy money was already made. So why did altcoins rally before, like Doge and Shiba? Do you think investors were investing because of tokenomics or just because people want to multiply their money? You hit the nail in the head there. People were buying because they want to make money. That's not sustainable though. That's why, notice this. I don't know if you notice this, but a bunch of altcoins. Let me delete all these. Boom. Many altcoins. This was the altcoin AMA. I'm glad we're doing this though, because we had to. It was mostly Bitcoin and macro. You guys want to know about alts. When an altcoin is created, people are hyped, and the altcoin does extremely well. Pendle here did an 8x. Then reality sinks, it hits. They start doing incentives and rewards and LPs. Boom, inflation hits. When Usual, which has the worst tokenomics I have seen, at least in this cycle, when it launched, it went from 2 cents to a dollar. I cannot believe it went to $1.60. Then the reality of what this is hits and it sinks. So initially it goes 11,000. This is ridiculous. Like it does initially it goes for 10x. Then reality hits and it goes back down to earth. 99% down, and it's not going to recover. Meme coins were the same thing. Shiba, Doge largely was the same. With all of these, they behave the same way. So this I cannot see. So with this is the I think this is the first. No, Bonk is a better one. The first meme coin on Solana. The first meme coin on Solana, amazing run. By the time it gets listed on exchanges, everybody sells. But why are people buying? Why are people buying Bonk in the first place? Utility? Real world usage? No. They're buying it because it is the first meme coin on Solana, which in itself is a meme. It's the first meme coin on Solana. What does that mean? Where's the utility? Is it a company? No. Is there cash flow? No. Is there any utility to a meme coin? No. So why were they buying? To multiply their money? Yeah, but that's kind of Ponzi-ish if you think about it. The reason the price is going up is because price is going up, and nobody wants to be the greater fool. So people are buying because they're expecting other people to buy, and eventually everybody sells. Not sustainable. And so yes, a bunch of altcoins when they launch, Athena was the same. Athena launches. Athena's an amazing project too. They issue a stable coin, but it's a stablecoin that uses perpetual futures. It's awesome. I love it. Look at what happens when it launches. It goes, hey, where's the percentage return? Oh, there's no percentage? Okay. 46% on the second day. The first day, I'm guessing, was even better. It went from nothing to, oh, this is Binance. This is fake. Okay, let's see if we can find another place where Athena was listed. Whatever. It doesn't matter. So Athena launches. It goes from, let's call it 20 cents. This is not actually real. I don't know. Exchanges do this to highlight this coin when it launches. They just create a fake low price and then the actual high price so that it shows up on the most highest 24-hour return. All of these disingenuous things that the exchanges do to get you to buy the altcoin. And so, but let's use that fake price. And let's say within weeks, Athena does 1,000x. Actually, the other one did 100x, right? The usual was 100, not 10x. Crazy. 100x. And then down 99.9%. Athena, 10x. Then down, I'm guessing a lot. Let's see. Yeah, from that high, it's down 86%. Probably not going to recover. So what happens is it launches, people are excited, they buy it, and then the teams start issuing a lot of tokens, it starts cashing out, and it sinks. This is the life cycle of an altcoin. They're all oversupplied. There's no real utility to them. The only reason to buy Athena is you stake it and you get more Athena. That's kind of like the perpetual motion machine concept, right? It's like, where's the utility here? So I buy the token so I can get more tokens. Okay. At some point, I will want to cash out, right? the only reason I even have this is because I want to make money. So I'm a seller. In my mind, I'm a seller. Even if I'm accumulating Athena, I am a seller. I just, the only reason I'm not selling yet is because I want more tokens so I can dump. In the case of Athena, most people were doing that. So I thought I was smart. So I would buy Athena, stake it, hedge it, and then collect that sweet issuance while being hedged. The problem is most people were hedged, and so the interest rate you had to pay to hedge Athena offset the issuance. You made zero or like 5%, even if you were hedged. That's a real return. So nobody wanted Athena. That's what it means. Nobody wanted Athena. Everybody wanted to hedge. Everybody did. And so we ended up paying the same interest rate we were getting in return for staking Athena. So it was a wash, complete wash. And that's true of a lot of these high value, high issuance stable coins, high APR. If you want to hedge, you have to pay for that hedge because nobody wants the token. And so eventually when you do the math, you're making 5-10%, which is the same you could make from a stable coin. So it makes no sense because market is more mature. This wasn't the case before. This wasn't the case. In 2020, you could get away with this because people were so hyped about Uniswap that you could just stake it, get some rewards. I didn't do this with Uniswap, by the way. I'm not sure you could, but just an example. You could stake your Uniswap. Let's say you could, and you got paid for hedging. So I was making 30% for hedging and then another 20% for staking because people thought there was some utility. So whenever I say there's no utility to the altcoins and the market is more mature, I'm a trader. I know this because funding rates on perpetual futures are negative now for these stable coins, whereas before they were positive. You could just buy the altcoin and hedge it and make money. If you could buy the altcoin, hedge it, and then stake the altcoin, you made money on both legs. You made money for staking the altcoin, and you also make money for hedging the altcoin. That's gone away. That doesn't exist anymore. That's how I know the market is more mature because people are being smart. There are more smart traders. I don't want to say like myself, but I was doing that very successfully in 2020 and 2021, and I can't now. And I asked some people who do this too, and I asked them, "Hey, can you get more than 20%?" And everybody's like, "No, 20% is as much as you can get nowadays." So if it's 50% APR, in other words, if I stake Arbitrum, just random name, and I get 50%, chances are I'm going to have to pay 30% to hedge that thing, and I'm only going to get 20 because the market is far more mature nowadays. So I know this for a fact. I'm not just saying. I know it's more mature because some of the things I used to do for money, it was free money, guys. It doesn't exist anymore. I can't do it anymore. It's actually hard to get yield, real yield in crypto now. Most of it is either impermanent loss eats away at you, or yeah, impermanent loss is a big one, or hedging. The cost of hedging is huge, or things like that, which did not happen before. I'm the only altcoin guy in the group. He said, no, a lot of people are into alts. I trade alts too. So this is, believe me, I run services at Wise, and it's just a little bit of inside information. This should not come as a surprise, but if you tell somebody that you have a great Bitcoin product, they don't want to buy it. They just want to buy altcoin stuff. That's really what people want. They want altcoins. So no, you're not the only one. Most people just are into the altcoins because they're still thinking that we're in 2020 and they know somebody who made a lot of money from altcoins in 2020. I bet you're not going to find anybody who made a lot of money in 2025 from altcoins. But people have not caught on to this yet. This is actually one of the discussions we have at the company where we go, well, eventually they're going to wise up. They're actually going to want to invest in Bitcoin. But right now, nobody wants to. Nobody wants to invest in Bitcoin. It's actually a problem for companies that sell crypto services because we want to sell serious stuff. And so we tell people, you're going to buy Ethereum, Solana, and Bitcoin. And they don't want to know it. They don't want to touch it. If you tell them, I'm going to get you into the best meme coin, oh, they want to buy that. So it's a problem even for us who provide services because how do we get to people? So no, most people are very much into altcoins. They think that the money has been made in Bitcoin, and Bitcoin is no longer the place to be in. So they want to know about the next Bitcoin. So you have to convince them that no, there's opportunity here. You don't have to go into some shitty. And I partly blame some of the big newsletter guys like Real Vision. They sell altcoins. They sell altcoins, and but I know them personally. Like I've spoken to them. They believe in the altcoin message. They were saying, "Hey, we're just gonna go all into Sui because why Bitcoin when Sui's gonna outperform Bitcoin by 30x?" Let's see if Sui has outperformed Bitcoin, shall we? This is This is hype versus reality. I've not looked at this chart, by the way. So maybe I'm wrong, but let's see. Oh no, it hasn't. It's down. So how did that work out? See, that is an old framework. It used to be true. I used to do promotions at Wise where we used to say this because it was true. We used to say things like, well, in a bull market, Bitcoin's going to go up 10x, but Ethereum is going to outperform Bitcoin no matter what. We would say, and this was true, that the reason Bitcoin goes up over time against altcoins is because altcoins go down more in the bear market. But we would tell people, don't worry, we know when the bear market is coming, so we're gonna get you into altcoins during the bull phase. That used to work actually, but it doesn't work anymore. Exhibit A is Sui. For whatever reason, um, I don't know what this is, but it's changed so the altcoins don't necessarily outperform Bitcoin. And if they do, not by enough. So it used to be true because it's still true. Notice that this is Jan 25. Let's see. Did Sui ever outperform Bitcoin? You can see that there are periods of time when it does. So it's not like it's not true. It is, but it doesn't last. It's like brief. So for some period of time, the altcoin will do better than Bitcoin. But it used to be for 2 years, the altcoin is going to do much better than Bitcoin. So you could safely deploy money into ETH if you thought Bitcoin was going to go up. That's a very old framework, though. That doesn't work anymore. So, like I said, I mean, I'm still seeing people and I know them to be honest, but they're still saying they're stuck on that mindset where, okay, I think Bitcoin's going to go up because liquidity is going to go up. But if Bitcoin goes up, Ethereum goes up more. And if Ethereum goes up more, Solana goes up more. And if Solana goes up more, then Sui goes up more. And if Sui goes up more, then maybe Pepe is going to go up more. So I'm just going to go all in on Pepe. And it doesn't work. It doesn't translate like that. Pepe is a bad example. Let me just say all in on Sui because Sui will outperform ETH. Sui will outperform Solana, which will outperform ETH, which will outperform Bitcoin. So why do I care about Bitcoin? Why do I care about Solana or even Ethereum? I'm just going to go in on the one. I'm just going to bet on the fastest horse. But this last bull market completely broke that mechanic. It doesn't work that way anymore. The way I do it, if you want to know, is I do like Sui, so I do have an allocation, but I have Bitcoin too. What if I'm wrong and Sui does not outperform Bitcoin? Well, you're not going to make any money, or rather, you're going to make more money on Bitcoin, right? So you're going to be left behind. So that's the way I see it. Is you should, if you like an altcoin, like I like Solana and I like Sui, you should own it, but it shouldn't be the only thing you do. Most of your money should still be on Bitcoin or ETH, Bitcoin and ETH. The proven ones, the ones with network effects, the ones with ETFs, the ones that have made it and are going to be around for a while. Because even Solana may just get outcompeted by Sui, for instance. So Perry's saying I like alts, but I like anything that makes positive returns. Alts didn't really make enough positive returns. Too much risk and worthless memes based on literally nothing but the mascot and the hype. Yes, 100%. That's as Ponzi as it gets, 100%. And Ponzi's almost always collapse eventually, even fiats. 100% agree. I like alts too, and I would say this: if you trade alts, you can actually there's a place for alts. Some alts, like again, the ones that have some type of network effect and usage and applications. This is my top 5 here: Bitcoin, ETH, Solana, BNB, and Tron. These have users, and applications. These top five I trade all the time. And it's very much worth it. Because if you think like a trader, Solana's really volatile, so is BNB. Tron, not so much. Actually, Tron has lower volatility than Bitcoin itself. Ethereum is quite volatile. So there's a lot of opportunities within altcoins. And so when I set up my vaults, the way I set them up is usually it's volume weighted, not market cap weighted, but it's the allocation to the altcoin is market cap weight, volume weighted. So it's like usually it's about 30% Bitcoin, 2/3 altcoins. Out of those 2/3, though, half of that is Solana and ETH. So I trade them a lot. And in fact, if you ask me as a trader, do you think you can make more money than Bitcoin if you trade altcoins? 100%. You should definitely trade altcoins because altcoins are volatile instruments. They're so volatile that sometimes you put a trade on Sui and it does a 300, it returns 300%. And Bitcoin's not in 2 weeks, and Bitcoin's not going to do that ever. So there's a place for the altcoins. So you want to identify the altcoins that have real users, real growth, active addresses, whatever, and have proven that they can rally in a bull market, like Solana, like Sui, like BNB. I'm not sure. I mentioned Sui. I'm not sure about Sui. Sui is a great layer one, though. So I think it's gonna be around. I mean, it's one of those altcoins that's like a couple announcements away, or one killer app away from being mainstream, one of the most widely used layer ones. So you want to trade it. You want to be involved. If you have an algorithmic trading strategy like myself, you want that to be one of the assets you trade because you know there might be a 5x there at some point. So you want to have it. You want to trade it. But don't only own this, and don't be a buy and hold investor because that doesn't work with altcoins. Sui may go to 10 cents. And from 10 cents, it might go to 60 cents in 2 weeks. If you bought it now, you're still down a lot of money. But if you're trading it in and out, just waiting to see if it's going to do that 10x, that's how you make money on the altcoin. But I fundamentally believe there needs to be a reason why you bought it in the first place. There needs to be something there. Why Sui? Applications, I've used them. It's a little broken, but the technology is good. The team, I've heard, is one of the best in the industry. So like the ingredients are there for a 5x run, but it could be a 5x run from 5 cents to 25 cents. You don't know that with the altcoin. That's the problem. That's why trading altcoins, yes. Owning altcoins, like you're investing in NVIDIA, no, this is not NVIDIA. All right? You're not buying a company. This is not Tesla. This is not NVIDIA. This is not the United States stock market. It's a very speculative bet. So in my research, what I have found is altcoins, 100%, you should trade the altcoins, but you should not own them through a cycle. Because once the altcoin is down 99%, it has to do 100x just to get you back to even. So if you're holding, hoping that eventually it's going to make an all-time high, many of them won't. But I mean, let me show you CRV that for no reason had one of the best runs in the entire crypto space when Trump won. Why when Trump won? I don't even know. Because DeFi is going to be legal now, maybe in the United States. But look what it did. So I trade CRV. And CRV, when Trump won, went up. It did a 5x. 5x. So maybe you're trading it for years and you're making 10%, 20% a year, and then 1 year you make 5x. Why not? It's just a small allocation, and I'm not committed to this thing. Whenever it goes down, I sell out of it. If you notice how my vaults trade, you probably don't know, but the way they work, especially the 5-day vault, which is the first one that I launched, the way it works is basically every time it looks like the altcoin might pump, it buys in. If it doesn't look like it's going to pump, it sells out, which results in most trades being losers, small losers, like 2%, 3%, and then eventually makes 5x. And if you average that out, it turns out it makes 100% a year. But the only reason it makes 100% a year is because occasionally the thing will 3x in a year. And every other year, you're just going to kind of break even. So not a strategy that I would run manually because you have to be very patient, but it's like you're fishing, and eventually, boom, you hit it big. You catch big fish. So that's how altcoins fit into a portfolio, in my opinion. You're there, You're patient, you're not committed, but you're training it. You're looking for that opportunity. You're looking for that 10x, but not as a buy and hold investor. Because if you're in as a buy and hold investor, inflation will destroy your money. That 20% inflation will eat away at you. Even though CRV did a 5x in November of last year, it went only to $1.02. And if you zoom out, it's been on a downtrend ever since. And that 5x move doesn't look like much. So if you invested into CRV when it was at $4, when it launched in October 2021, for instance, you're never going to get your money back, ever. Okay? So there's a crucial difference between trading it and owning it. You should only own companies. I know it sounds weird coming from a crypto guy to recommend TradFi, but yes, if you want to own something, make sure it's a company that has cash flow. Or you could buy gold. I think you could buy Bitcoin because their narrative is strong for those. But I would even say that eventually the monetary system will be fixed. And once it's fixed, I'm not going to be a Bitcoin holder. I'm not going to own gold. I'm going to own stocks, companies. That's what creates value long term. Okay? The only reason I'm in Bitcoin now is because fiat is getting destroyed and burned to the ground. And Bitcoin outperforms that and protects my money. It's the only reason I'm in Bitcoin. It's the only reason. So it's a fixed asset. That's why I like gold too. But I don't know. By 2040, I'm probably not going to be a full-time crypto maximalist. No, because by then I hope the monetary system is fixed. I think a reset is coming between now and 2032. And once that we're through that reset, I think that fiat will have more stable value. And I think at that point, I'm going to be much more bullish on just companies and things that have real world utility, real that represent real value, which I would argue even gold or Bitcoin is just protect your wealth, but they don't really create anything. That can change. I might be extremely bullish on the likes of Ethereum or Solana though by then, because they could become the new base layer for the new financial system. Who knows? And in that case, you definitely want to own those tokens. So then he says, so no hope of them making significant returns. Hopefully I answered that question. No, there is hope. Those rallies do come, but not if you're an investor, because if you're an investor, you're getting destroyed by inflation. It's the same as, can you use dollars? Yeah, absolutely you can. But don't hold them long term because inflation will destroy any purchasing power you have. And the altcoins are that on steroids. So Perry's saying, so minor altcoins being printed, inflated, and given away and airdropped have basically become marketing tools. Like musicians provide free giveaways of songs to radio stations, or celebrities give away posters and autographs. So the actual underlying product stays relevant. Or kind of like companies give stock shares to employees. Yeah, that's pretty much it, Perry. Well, the only difference being that the company, if it pays dividends or actually represents ownership of the company, so there's some real value there. Whereas the with the altcoin, they don't even represent that. They're just completely worthless. Now, sometimes you can vote on the DAO. They have DAOs, and you can vote. Yeah, okay. I thought maybe that could give them some real world utility, but the fact is that it doesn't. It's not enough. You can vote with those tokens. The problem is you can usually vote to give yourself more tokens. So that's the only reason. That's the only reason to own them is, oh, I can vote to give myself more of these. So I can vote more and give myself even more of these. All right. The fact proves that doesn't lead to real to capital appreciation, let's just say. It doesn't drive returns. So they need to come up with something else. Like I said, the tokenomics are broken. So regarding planetary cycles, which planets and alignments you use to predict the market? Are you using the Bitcoin natal chart? This web is very interesting to and use astrology for different markets. So Oriole, no, I don't. So planetary, I don't use natal charts. I am starting to use certain fixed points based on a book called Pentagonal Time Cycle Theory by I think it's called Bradley Cowan, who wrote that 2012. Great book. So I use fixed points. in my forecasting, but I only use those 5 that are there on that chart. You can find a conversation on the Astro channel in the Discord. You can find the points. I think Margot shared them with me. Um, I'm thinking of maybe using natal charts because the way they would work on my model is they would become fixed points, which my model allows. It allows me to add anything, including stars or fixed points. To be honest, I'm just using the solar system. I don't want to bloat the algorithm, even though I could, because it's a computer and it identifies things that work. So I could use just all the asteroids. I've seen some charts that use a lot of things. But for now, I just use just the solar system, including the moon. So I use geocentric astrology because it includes the moon. But I'm looking into heliocentric now, which you cannot have the moon there, and I like those results. You have more powerful turning points. You have less but more powerful turning points. I kind of like that. So that's it. It's very simple. It's very simple. I think the complexity comes from the algorithm itself, where I'm looking at all the cycle highs and cycle lows, and I'm correlating them to all possible planetary combinations, all angles between two celestial bodies, anything you can think of. I'm testing out uh, I don't know, like thousands of different combinations. And then I'm only selecting, I think it's like, I don't know if it's like 5,000 combinations. And then out of those, I think the model usually identifies 100 planetary combinations that are relevant for that market. So I try to throw a lot at the algorithm, but I also try to be very selective. And then it's like me that 2% that are statistically significant, and I just throw out the rest. That's that's how it works. But it is a work in progress. The thing is, I don't want to change the algorithm too much because it has been working quite well. It misses out. There are some turning points that don't show up on the forecasts, but for the most part, they all do. So it's kind of that rule. And yeah, if it ain't broke, don't fix it. I don't want to add too much to it. I thought of adding declinations and retrograde movements and all of that stuff. Then I thought, why would I do that? This thing is working well enough as it is. So I want to be careful with whatever tweaks I add to that model. I don't want to change too much, given the fact that it already works. This thing is, I like writing models and I never know when they're done. In fact, they're never really done. But I always try to remind myself to be careful with how much I add to it. I just don't want to. The solar system plus all the classic aspects between the planets seems to be working well enough. So why add more? I feel like maybe it will become too bloated. Even though the algorithm should anything that's bloat should be discarded. But even then, I'm just trying to be careful whenever I touch that forecasting tool. And Arvin is saying, can you provide an outlook at what the price action of BTC will look like through 2026? Sounds like you're saying a lower high at the end of March. What do you see for the rest of the year? All right, that's a great question, Arvin. So let me share with you because I actually just glossed over that. What do I think is coming? Well, I don't know. Let me just start by saying that based on the fact that the Fourier cycle has been made as of the crossing of this black line, the 320-day cycle low VTL, I do not think Bitcoin makes a new all-time high in 2026. Let me just start there. I don't think we get a new all-time high in 2026. But what is 2026 going to look like? I don't know. I think it's going to look like, let me just try and draw it. I think it's going to look like this. And then I'm going to unpack the question and hopefully provide some details. So I think it's going to go, I think the next move is we're back above 100K, but then probably back down. But I'm not so sure about this. I'm going to show you why. Probably back down, something like this. It may be that the bear market low has already been reached. It's going to be reached, between now and February. And it's like 70K. I'm not expecting like a big crash. I think it's going to be a sideways year for the most part, with one of the main lows being made now, and then potentially the worst case scenario is we make a double bottom to that low, maybe a slightly lower low, sometime in October, in Q4, sometime in Q4. that's a bearish outlook. But it may be that Bitcoin has a strong rally now, a big sell-off going into July, something like this. And the rest of the year is just kind of like trying to go up again, which kind of looks bullish. That's what look bullish. And the reason I'm saying that is, well, first of all, let me just say the fact that liquidity is growing by this much between February and March, pretty much, in my opinion, is a done deal. This thing is going to rally. It's probably going to go for another low now. So I'm not expecting a lot of upside now, between now and late January, let's just say. From there, I'm expecting a rally that takes us above 100K. This is because we can see that on liquidity. But you can already see the liquidity rally is already kind of starting to lose momentum. So I think it's going to go for another, maybe a double top here. Maybe liquidity might do something like this. If you look at the forecast on the Discord channel, there's a big, big high for, I think, April 20th. So I think Bitcoin's going to rally until then. Liquidity doesn't show that, which leads me to think liquidity is going to keep growing. Now, the outlook should be something like this. So what does it look like for the rest of the year? Something like this is what it would look like. So this is my favorite chart. And this is bonds. This is a 10-year rate against liquidity against Bitcoin. So blue is Bitcoin, orange is liquidity, and black is the 10-year treasury bond, the price, not the rate. Price of the bond. And what it's showing is what I just said, liquidity growing until sometime in late April. I just said, if you look at the forecast, late April does show up as an important high. So I think liquidity continues to grow. If you look at the black line, the orange line, which is liquidity, the black line is the price of the bonds. Liquidity tends to follow bonds. Okay, so it should continue to go up into a meaningful high for Bitcoin sometime in late April. From there, we can see a bit of a crash. This might take liquidity down significantly. It might take Bitcoin down significantly. Also, I think maybe, let's say it goes to 110K. I don't know why I think 110, but I think it might exceed 100K, but not by much. From there, a drop into the middle of the year. But from there, liquidity, or rather the bonds, they don't really show a crash, do they? So if liquidity continues to follow bonds and Bitcoin continues to follow liquidity, it may be that we have this big crash, big sell-off in the middle of the year, with the rest of the year, Bitcoin being just trying to recover. So I'm not expecting the all-time highs, but I'm also not expecting like necessarily. So based on the bond outlook, it may not be that Bitcoin is going down for 12 months, maybe not even 6 months. It looks more like a sideways year. Now, I hesitate to use bonds to forecast liquidity, to forecast Bitcoin, because if you zoom out, they don't exactly track one another. So let me zoom out to 2022. You can see that the blue line, Bitcoin, doesn't really follow bonds or liquidity. They line up at the turning points. They line up very well, especially liquidity and Bitcoin. Whereas bonds and liquidity they tend to be a bit off, but there is an alignment there for sure. I mean, if I zoom into 2025, you can see that black followed orange and blue followed both of those. So they follow one another. In other words, what I'm trying to say here is if Bitcoin were to crash in 2026 and go down significantly, you should see bonds do the same, and you don't. So sideways. My outlook is sideways. Big rally coming up now. It's probably going to be followed by a big sell-off. And then the second half of the year, I just don't know. Just stick around, and we're going to know more as time goes on. But for now, my outlook is that Bitcoin might stay below the high made in April, but above the low made now in February. So just sandwiched between those two levels. And then we might see a rally that takes us to the all-time high starting sometime in Q4. But it's going to start from a low level, 90K, right around where it is now. I think it's going to be a wash. All right, let me speed through these because I do have to go in 15.
Great question, Arvin, by the way. Hopefully that answers what the outlook is. It's just sideways. This is no new all-time highs, not necessarily a crash because liquidity is looking pretty good. So we have the cycles telling us no highs, but we also have liquidity telling us, hey, it's not going to crash either. And yes, every crypto bear market came with a crash in liquidity. So we're not seeing it now. That's actually quite bullish. But Perry's saying there are existing privacy coins. People just don't care yet. Zcash, Monero, Dero, Aeon, Wonero, Pirate, Dragon X. The problem, Perry, I think, is that all of those are payment coins, whereas Midnight, which I was highlighting, is a layer one. It's a smart contract platform, and they're actually pretty clever in the way they do smart contracts. It doesn't compare to anything. It doesn't compare. The closest thing I would compare to is Zcash because it's not just about being private, it's about how you reach that encryption, how you reach that privacy. And to my mind, in my opinion, this is my opinion, but zero knowledge proofs are the best way to do privacy. Monero doesn't do that. But Monero does privacy by default, whereas Zcash is optional. So Monero and Zcash are both amazing. The others have no liquidity, no users, nothing. Monero and Zcash are the two privacy coins. Dash is another one. You didn't bring it up, but they do private transactions, but the way they reach that privacy is quite shitty. Zero knowledge proofs are the best way to do privacy. And Midnight is the only layer one platform that has zero knowledge proofs for smart contracts. That is unique. That is unique. No one is doing that. Back in 2018, there was a layer one called Komodo, and they were using it was basically Ethereum using Monero's encryption. So not the best encryption, but it was not optional. It was on by default, but it never took off. It just never took off. This one may never take off either, Midnight, but it could. So that's what an altcoin trade is, right? It's like super speculative. It might work, it might not work. At the very least, it's unique. So let's see. Do you not think that there's a chance people will buy altcoins again just for multiplication? I think I've answered that question already. Yes, but that doesn't mean they go to new all-time highs. All right. Just at the risk of sounding like a broken record, Exhibit A, CRV. Does CRV go up by 300%, 400%, 500%? Yes, regularly. Is CRV in an uptrend? No. So if you're a trader of CRV and you're just there for that pump and you're in cash every other time, you can make money from CRV. If you bought CRV thinking you're going to get rich and you're just waiting for CRV to go back to a new all-time high and 10x above that, it's never going to happen. It's just never going to happen. You're going to lose your money. So if you bought and held, you're down 90% and you're never going to get your money back. If you're trading in and out of it and you're smart about it, you know how to trade, then yes, you can make some money because you can make money from those pumps. So yes, people will buy altcoins all the time. And yes, altcoins will pump. That doesn't mean big altcoins will make new all-time highs or that they're great investments. No, that's never going to happen. Those pumps, they last a month, they go away, and then they go back to the previous lows. So they pump and they dump. And that's all they're good for. And Raoul Pal says it's macro that controls or alt. Raoul Pal says it's macro that controls all the alts, I guess, are dead stuffs forever. Or macro that controls or alts are dead stuffs. I don't understand the question, but I think what you're trying to say is if the macro gets better, the alts are going to do great. No, he's wrong about that. There's no data to prove that. He will show you charts from 2017. He will cherry pick charts from 2020 to show you how that it's the macro that makes people stupid and buy altcoins. But people are not stupid. All right. The reason we were buying altcoins in 2017 is because we thought they would work. Most of us learned the lesson and we were not buying altcoins in 2020. That said, in 2020, a lot of people entered crypto for the first time, and there's still some belief that the alts would do well. In 2024 and 2025, we don't believe that anymore. So the alts are dead. And so the market is getting smarter and more mature. That's my point. That's not what Raoul Pal is saying. That's what I'm saying. What I'm saying is the market has been more mature over time. And I have been in crypto longer than Raoul Pal. So He's great. He's brilliant, but I've been doing this longer than he. And I was there when people were going bananas over the altcoins. And I know the environment is different now. And it's because it's dominated by people who have been burned out on altcoins enough. So, no, they're not coming back. They have no utility. And if you want to make it in future cycles, you need utility. And I am frustrated over teams that do not change the tokenomics to reflect the new. They don't adapt their business models to the new crypto market. This is a new market. It's different. It's much more savvy. It's much more intelligent. The applications are much more useful. You cannot just print money, like Perry said, perfect. He said it perfectly. They just print money and they give it away as a way to incentivize usage. That is a horrible investment. And it only works for the teams and the VCs. And that's why they still exist. That's why they're still doing it, because it works for a group, a very small group of insiders. That's who the altcoins work for, not for you. If you want to make money for an altcoin, create a dApp and then launch an altcoin and give yourself half of the supply. Actually, if you give yourself half of the supply, nobody's ever going to touch it. Give yourself 10% of the supply. And as soon as it pumps, sell it. And it's free money. But if you want to invest, you're going to get killed. And I do think that Raoul Pal should just update his point of view, because this is not happening. And he's been showing that pump since 2023, my friend. He's been showing that for 2 years, going on 3, and it's not happening. And it's not going to happen. Wish we had time to cover metals. Perry, I'm sorry, we do not, unless there are no more questions. But I really have to go. I have a meeting in 60 minutes and I need to get something to eat. But I'm going to go over the questions. If we do, maybe we can touch on them. Let's see. What do you think about ETH? Can it go to 6,000, 7,000? If it does that, what do you think will happen to the market? That's an analysis you did 7 months ago, saying that ETH can make a new high, and they will not be over 3,200 this cycle because they have entered a bear market territory. Can you tell why they make new? So I do think ETH can go to 7,000 and 6,000 and the all-time highs, just not now. And just to be clear, I was early to be bearish on ETH because when ETH crossed below its 320-day cycle low VTL here in February, the same time that Solana was crossing that black line, ETH was crossing the black line. And so it happened at the same time. And I said, okay, it's not going to make new all-time highs, but it did. Sorry, not new all-time highs, no new bull market highs. So what I said at the time in February 25 is Ethereum is not going to exceed the high made here in January. It did briefly. It did so briefly. I don't think I've said this before, but the only reason it did this is the passing of the Genius Act. They passed the Genius Act and Ethereum had a big pump that kind of distorted the cycle picture. This is very rare, but it can happen. It happened in 2020, last time that the cycle picture is kind of distorted, March of 2020. Everything makes a new low, but it shouldn't have, in air quotes. The reason is COVID and the shutdowns. So Ethereum went up by more than you would have expected, simply because it had this external catalyst from the Genius Act. You can also see that it was rallying. Let me see if I can line it up with liquidity. So Ethereum was rallying in spite of liquidity going down. Liquidity had peaked on July 14. Ethereum didn't care. It just kept going. So this is what an external catalyst can do to it, but it can only last for a couple of weeks. So I was never bullish on ETH. I never turned bullish because I thought, okay, sure, it slightly exceeded the high from January, but that's an external catalyst. Liquidity is also quite shitty. So we have cycles pointing down. We have liquidity pointing down. There's no way this rally is sustainable. Now, you have to respect the price action. So once it goes to a new high, a new bull market high, there's a chance. I mean, this is trading. It's probabilities. I had my position on ETH. I bought it here. I believe I actually bought it literally here. And then I had it on. But as soon as it crossed back below here in October, I just said, okay, we're done. And I believe I sold and I had calls. I don't know how I did it. It wasn't a high confidence trade, but I thought maybe. Because remember, we had Asian liquidity too, and Asian liquidity was going up. So there was a chance. There was a chance, but it wasn't great. And now it's done. So 6,000 ETH, 7,000 ETH. Is it going to happen this year? No. No, it's not going to happen this year. When the all-time high? I don't know. In 2027, 2028, you might see any all-time high in Ethereum. Right now, no, you're not going to see it. What do you think about ETH? Oh, this is the same thing. Let's all make an altcoin. Yeah, that's the only way to make money from altcoins. It could be the Marco Cycle Secrets shitcoin. And it gives you access to this Discord. You have to own the token and you have to stake the token if you want access to the Discord and private YouTube videos. And we're just all gonna share on that. And then we're gonna make money from the altcoins. Yeah, the issuers, guys. The issuers are the only people making money from altcoins, which is why they're still doing it. And they're going to continue to do it until all of us get wise enough to know we're being dumped on and we're being used as exit liquidity. And when that happens, these guys will stop. Because the only reason they stopped doing ICOs is because regulators said, you cannot do that. That is illegal. So then they started doing airdrops and incentive programs. And so the way it works is this. You create 100 tokens, you give yourself 10 of those tokens, and then you create a platform and you start distributing those tokens, hoping that the price will pump. As soon as it pumps, you sell your 10 tokens and you're out of there. And that's it. That's tokenomics. It's still in 2026. That's tokenomics for most altcoins. Not all of them, but for most altcoins, that's it. That's that's a secret formula. It says create something out of nothing, get people to buy it for whatever reason, and then you dump on them. They're called pump and dumps, and people do them on like pink sheet stocks. They've been doing it forever. They've been doing it for decades. This is nothing new. Just create something out of nothing, get people excited on false premises, dump on them. The house always wins. Banks, casinos, exchange governments, and now altcoins. Yes, you set new altcoins, but I changed it. Now it's the altcoin. It's the other way to just fleece the customer. The altcoins. All right, I'm gonna do gold, Perry, because I do want to touch on it. It's continuing to make highs, so I just want to touch on it. But at 5 minutes, and I do have to go. Let's go to gold. So gold. So first of all, let's hide liquidity because it's useless for gold. So gold had this high, which I said, okay, this has to be it. It wasn't, because then silver went and made new all-time highs. We can bring silver here. And anything I say here, just know I don't trade silver at all. Oh, no. This needs to go on a separate chart. So I don't trade silver at all. So I'm just a casual observer. I do trade gold, though. So silver went crazy to the upside, and we've seen this before. If silver is making the all-time highs, there's no way gold is going to go down. They move in the same direction. So when silver broke out, I thought, okay, this is not the high on gold. Gold is nevertheless extremely overbought. So I'm reluctant to do anything here. I am going to rerun the forecasts for gold because I don't think I think the forecasting model, so using geocentric astrology, we got a lot of turning points in gold, but I want the turning point. I want the big high. I want to know when that takes place. Because once I know that, or at least I have an idea of when that is, then I can trade it safely. Problem with gold is what happened last week, or when was it? No, December 29th. Gold crashed again by over 4%. That's a big move. And that tells you that when this thing tops out, it will get destroyed. So previously, we could say with confidence, if gold goes down 4%, that's it. That's the high. Obviously, there are things driving this thing higher. We discussed these. The 7-year cycle points up until at least 2028, so we should continue to make new highs. But it's due for a pause. Gold is due for a pause, and it doesn't matter if it makes a new high. It's due for a pause. It's extremely overbought. It's risky now. If I was in this trade still, which I'm not, I already sold, I would begin to dollar cost average out. However, it is being driven by silver. Silver is about to top out too. I don't know when because I don't have forecast for it. Hopefully, we'll have new forecasts and maybe they'll work in silver too. Um, I would be very tactical here. I'm thinking maybe I buy calls if it closes. So this big move, same thing that happened here. So it went down by more than 4%. I'm staying out. I never bought this. It went down by more than 4% again. As soon as it makes any all-time high, that's not a coincidence. That's the market already screaming that we're entering distribution. So the easy money was already made. Now, I'm not saying gold has stopped out. No, gold will continue to make new highs, but it's due for a pause. The type of pause that takes prices down, I don't know, 10%. 10%, and then it takes a while. It takes a few months. Maybe 2026 is that year when gold hits a pause. I'm extremely bullish on gold. I just don't think you want to buy it at 4,500. I think you want to buy it at this point, you want to start buying at 4,000, but 3,500 to 4,000 is more reasonable. I think if you're patient, you can buy it whenever, dollar cost average, whatever. But if you're trading, if you're tactical, if you want to get in and get a good rally as soon as you're in, I don't think the market is going to give you that right now. I don't think it's going to give you easy money. I think the best case scenario. Here's what I'm thinking. Let's look at Bitcoin because modern markets are psychology, right? So they're driven by the same stuff. So look at Bitcoin here. Where is it? There we go. So this is Bitcoin in 2020, in 2021. So notice that distribution started here. First of all, we have this amazing rally between this and this to March and January. Amazing rally. Is really good. It goes up a lot. Then distribution begins. Here's the first warning. We're entering distribution. And notice that after the sell-off, the market never goes parabolic again. It just never does. Then it tries to go for new highs, but boom, sellers. People are selling. And then it's obvious. You're entering distribution. This is distribution. Goes up. People are still, there's always latecomers. So the latecomers coming in, but the market is in distribution mode. And then it hits and it goes on 50%. The percentages are different for gold. But I do think if you go back to gold's chart, you're entering the same pattern. Distribution. This is a warning. It's not the high. I got that wrong. But it's entering distribution. This is proof enough. So we're entering distribution. So maybe I think the most bullish scenario for gold right now, before it enters a more meaningful correction, is going to be that maybe it goes like this. So we already know there are sellers and leverage and retail and the same old story. So the best case scenario is it's a rocky, very rocky ride. Sure, it goes up, but it's not the same. Pattern broke. Then one day you're going to see this. You're going to see this. That's it. That's the end. Higher highs and higher lows, lower highs and lower lows. And notice that the higher highs, they're higher, but they're getting lower, right? They're closer to the last high. So the market is struggling to make new highs. I think gold is entering this phase. So if you're in the trade, you should stay in. Maybe try and sell whenever it hits any all-time high, you sell a little bit. And I would definitely say if you see this play out and it goes like that, that's it. It's over for now. Again, if you're a long-term investor, you don't care about this. If you're a long-term investor, you don't want to sell here, but you don't want to add to your position here. So that's my view. It's like it's not easy anymore. Go on Twitter. Everybody's talking about gold. That's in and of itself a negative. That is a red flag. Everybody's talking about it. You have the same people pumping Bitcoin on silver now. Are you kidding me? They're trading silver? Okay. That's it. That's the end. And one of the other tells is it's already gone parabolic and volatility is increasing sharply. So this is the same pattern. This is one of the most predictable patterns in all markets is that goes parabolic, then volatility increases significantly, then you hit distribution, and then it crashes. So gold is starting that. Silver will start soon. I don't know exactly when, because again, not my specialty, but
Oh.
we're getting there. So, all right. And with that, when I asked, Perry's saying when I asked a local coin store the recent ATH, the store said it was only sellers coming in for physical dumping, no buyers. There you go. Thanks for that tip, actually. Yeah, buyers tend to be smart, like physical buyers. One of my best friends is like a extreme gold bug, and he knows a lot about gold. And he always tells me these stories. And I have to say, the people who go to the store to buy gold are smart. They usually accumulate, they were buying crazy amounts of gold, and there was no physical gold in like March of 2020, 21. They were buying here, they were buying in 2015, they were accumulating. And by the way, the opposite is true. This is accumulation. You have a crash. These are like market basics, guys. I mean, and these basics, I used to ignore them before, but no, they do work. Look at this pattern. It's making lower highs, lower lows. But notice that we have this crash. And now, this is 2014. Every time the market made a new low, it wouldn't really crash. It would just kind of like hold in there and rally and then slightly lower low. This is accumulation. And it's the opposite of distribution. This is a great time to buy. And then you see it. Big rally. And that's it. It's over. By then, it's over. And you could connect the 18-month. And I think I did this on the gold lesson, which I know is on YouTube, guys. It's going to be at some point, but I'm not going to promise when. It's on my to-do list. It broke above the 18 cycle high VTL. That's it. That's the low. But notice that when the market is changing directions, it's not obvious at first. It rallies strongly, then it crashes. But the pattern has changed. We went from accumulation. We're still in accumulation here. And then boom, it's off to the races. I don't think we're going to see this. No crash. None of this. But we might see this. A little bit of this. We might see. Not even as long. Just this. I think I want to buy gold when I see this. Just, the big rally followed by just a decent few months of downside price action. And then you're going to notice, the accumulation here too. You just notice it all the time. You're seeing accumulation, right? This is like tape reading 101. You're seeing, yes, the market goes down, but also it goes up a lot. It's changing. It's not going down. So we're entering distribution on gold. It's just not a great time to get in. This is not the time. That said, if it makes a new all-time high, I might buy some calls. Maybe. Sure. Limited risk. Speculative. But deploying a position, nah, it's just not the time. All right, guys. And with that, I would leave you all because I have to prepare for a meeting and haven't eaten anything. So I gotta go. I'll see you all on the Discord. Thank you so much for joining the number 17. And I'll see you all in Discord. I'll see you all on the next one. Cheers, everybody.